Good morning. Tax Administration Jamaica is delighted to welcome you to this, the third of our webinar sessions on the Revenue Measures 2024-2025. Today we'll be focusing on our pensioners. We will be seeking to clarify the increase in the income tax threshold and the pension allowances for our pensioners and our fund managers. So welcome. The pension and the age allowance comes with a little bit of glitch that we are seeking to iron out for you, and we hope that at the end of the session, you will be on one accord. So welcome, and if you have questions, tax questions, other tax questions, may I just let you know that this morning we're just focusing on our pension, the allowances, and the threshold. So please reserve those questions. We can take them another time. As it relates to other revenue measures that I'm sure you're aware of, other tax questions, may I just let you know that I'll just want to let you know that we're working on guides for other aspects of the revenue measures. So please reserve your questions and we will get right back to you. Let us pray. Father, we thank you so much that to this platform you have brought us. I pray in a very special way that today you will be with the technology and help that the information will be imparted with clarity. So please, Lord, into your hands we present all our participants and all those who will be a part of the team in the name of Jesus. Amen. So, the Honorable Minister of Finance and the Public Service, in a bid to ensure the adequacy of social protection systems, improving equity and social resilience, and reducing poverty, sought to provide additional income to employed persons, pensioners, as you are today, and self-employed individuals, effective April 1st, 2024. This morning, Mrs. Colleen Williams, our Senior Technical Specialist for Training and Publication, will guide you on how the increase in the annual income tax threshold, which moved from $1,596,000 to $1,788,000. And the increase in the pension and the exemptions from $80,000 to $250,040 will be administered. Please feel free to place your questions in the chat. We have our chat monitors who will be assisting us this morning. Miss Debbie Brissett, our Senior Technical Specialist, Mr. Courtney Johnson, our Taxpayer Education Officer, Miss Marie McDonald, our Manager for Taxpayer Education, Miss Grace Smith, Technical Specialist. These persons will be responding to the questions that you will be placing in the chat. Fortnightly payroll operators, we will not have many of them because we're dealing with pensioners. But if we do, we're gonna be assisting you as well with guidance. So thank you for joining our session. And we are now delighted to hand over to Miss Colleen Williams.
Ladies and gentlemen, good morning. And let me add my little bit of welcome to you. I just want to say special welcome, especially to our teachers. Today is Teachers' Day, and we hail you. We say Happy Teachers' Day. And we thank you for the service, invaluable service that you would have given to this nation over the years. Happy Teachers' Day. Once a teacher, always a teacher. And we recognize you for that this morning. So I also want to say thanks to Mrs. Walker for her comprehensive introduction. And she would have told you that we'll be talking about the increase in the threshold as well as the age and pension exemptions. So we'll be focusing primarily on that today. However, those things, they don't operate in a vacuum. And so we will be looking at other issues that are related. So by way of our objectives, I just want to share those with you. You know, at the end of this session, you should be able to state, you should know the threshold, the amount of the threshold, and what the threshold is, the amount of the age exemption and the pension exemption. You are to know whether you're a pensioner. So as a pensioner, you're to know what your rights are. And as the administrators of pension funds, you ought to know as well. No, you should also be able to compute the effective amounts for each of those, because by virtue of the time when the increase was implemented, you will find that for 2024, you will not be benefiting from the full amount of what the minister would have announced on March 12th, right? But we'll talk about some more about that. No, you should also be able to explain the eligibility criteria. Now, this is a critical one. It has nothing to do with what the minister would have announced, but the eligibility criteria is very important for you to be aware of, because am I entitled to it? You must walk away from here knowing whether or not you are entitled to the exemptions. You should also be able to explain the rationale for the difference, because there's going to be a difference between the figure for 2024 and that for 2025. And the bottom line is you should be able to appreciate the impact of the changes. How does the change impact me? Does it impact me at all? And if it does, how so? So those are the primary points that we would want to cover in our session today. Please feel free to type your questions in the chat. For those who would like to verbalize their questions, I will stop at intervals and give you the opportunity to do so. Also, somewhere about midway the presentation, we'll be taking a 10 minutes break. All right, so we will go right on into our discussion of the matters. And the first one up is the threshold. What is this threshold? Now, you would have heard that the threshold has been increased from $1,500,096 to $1,700,088. But what is it? The threshold is a portion of a person's statutory income that is subject to tax at nil rate. So there is no tax payable on that. Right? Now, you might ask, so what is statutory income? I would like to say it in explaining statutory income, it is your gross income, meaning that top figure, less all allowable exemptions and deduction. So we have spoken so far about your age exemption and pension exemption. So your statutory income would be determined after you would have accounted for those exemptions, right? So you would take the exemptions from your gross as well as any other allowable deduction, and then you arrive at your statutory income. Now, having arrived at the statutory income, you then apply a nil rate to a portion of the statutory income, and that nil rate is what is referred to as the threshold. Now, as you will see here on the slide, income tax threshold and your disposable income, they vary directly. They move in the same direction at the same time. As your threshold, meaning your tax-free or the portion of your statutory income that is subject to zero, as that increases, your disposable income also increases. And you will find that your income tax liability decreases. Now, on the matter of threshold, we want to pay attention to the fact that it is only persons who are resident in Jamaica who are entitled to the threshold. So to the extent that you're a non-resident, you're not entitled to the threshold. And being resident for tax purposes, most of us who are born here, we have lived here, we have not given up our citizenship or domicility. We are Jamaicans. We are what we're described as being ordinarily resident, and so we would be entitled to the threshold. So when we speak of residency, we're thinking about persons who would have come from other places and are in Jamaica for less than 6 months or 183 days. So I would imagine that most of us online would, by virtue of being resident in Jamaica or ordinarily resident, be entitled to the threshold. Okay, so the increase took effect on April 1st. And it therefore means that for the year of assessment 2024, we will not be benefiting from the full amount of the $1,700,088 because for the period January to March, the rate of $1,500,096 was the rate that prevailed. So in order to arrive at the threshold for 2024, we take 3/12 of the $1,500,096 and we add that to 9/12 of the $1,700,088. And so you'll see that gives us, the sum of that is $1,650,090. So to the extent that your income in 2024 exceeds is below the $1,650,090, you would not be required to pay any tax. And pension is usually paid on a monthly basis. And so we will focus on the monthly threshold. So the monthly threshold for January to March, you'll see, is different from the monthly threshold for April to December. So for January to March, it is $125,008 for each of those months. And for April to December, it is $141,674. So that portion, those portions of your income would not be subject to tax. Now, come 2025, persons should benefit from the full amount of the threshold, $1,700,088, and the monthly amount will continue to be $141,674. So I am going to now I have been talking, Mrs. Walker has spoken, and I have been talking. It is time for you to talk to us. And so I'm going to ask you to respond to the question. Our first question, it reads, all of the following persons will benefit from the increased threshold except, pay attention to that word, A, persons resident in Jamaica, B, employees, C, persons not resident in Jamaica, and D, the self-employed. Let me just, before you respond though, something I probably should have done earlier, I'm going to ask you to use the raise hand feature for the questions that I ask, and use the chat for the questions that you want to ask, right? So I'm going to ask you to use the raise hand feature to answer the questions that I ask. Beverly, you're first out of the blocks. Go ahead.
Persons who don't who are not resident in Jamaica.
Persons not resident in Jamaica. That
Right.
is correct. They will not benefit from the increased threshold because non-residents are not entitled to the threshold in the first place. Thank you so much. And I know there are many other persons who would have the right answer, but you'll have other opportunities, I guarantee you. Okay, so thanks for that. Okay, so that would take care of the pension. And I know you would be putting your questions, that would take care of the threshold, I beg your pardon. And I know you'd be putting your questions in the chat. So we'll move right on into the pension exemption. Now, for those who are so minded, you will notice on the slide that we have the legislative authority, the legislative reference governing each of the items that we're talking about. So the pension exemption is provided for in section 12(1)(z) of the Income Tax Act. And it basically stipulates that individuals who derive a pension income from the following schemes are entitled to pension exemption. So before we go, you must, in order to be entitled to pension exemption, you must be in receipt of pension income. It is not just about your age, right? Because you could be, pension does not necessarily go hand in hand with age. There are some 30-year-old pensioners. There could be some 70-year-old persons who are not pensioners. So pension does not necessarily link directly with age. You will see that there are some age-related issues, which we will explain. But it is not as a result of your age that you're entitled to the pension exemption, right? You must be in receipt of pension, and it must be a statutory pension or a pension scheme approved by the commissioner pursuant to section 42 of the Income Tax Act, which would be like those private pension that your employer would have administered, or, you know, that kind of a thing. Or retirement scheme, you would have to have participated in the retirement scheme approved by the Commissioner General under Section 44A of the Income Tax Act. And these are pension schemes, well, retirement schemes that behave pretty much like the pension scheme. Their ultimate aim is to provide persons with income at the end of their work life, or at some future time. So where an individual's only source of pension income is from outside of the island, they are not entitled to the pension exemption. Let me repeat that. If your pension income is from outside of the island, it would not fall within the scope of a statutory pension in Jamaica, pension scheme, or one that is approved by our Commissioner General. And as such, it would not come into scope under section 12(1)(z) of our Income Tax Act locally. Now, I did say that it's not the eligibility criteria, the fundamental eligibility criteria for pension exemption is not age. However, your age will determine how it is utilized, right? So if it is that for a person who has attained the age of 55 years or certified to be permanently incapacitated, they are entitled, they may utilize the exemption against all sources of income. So your age has to do with how it is utilized, not that you get it, right? You have to be in receipt of pension to be eligible for the pension exemption. But to the extent that as a pensioner, you have attained the age of 55 years, or if you are certified to be permanently incapacitated, you may utilize the exemption against all sources of income. So for the person who has not attained the age of 55 years, the pension exemption may be utilized against your pension income only. And let me just pause there to use an illustration to make that hopefully a little clearer. So if you are, say, 45 years of age and you are in receipt of pension income, and your pension income is, say, $150,000 for the year. Currently, for 2024, the pension exemption is $207,530. And I'll tell you how we arrive at that figure. So just accept at this point that that is what it is. All right. So your exemption is $207,530. But for the person who is 45 years of age or any age below 55 years of age, they can utilize the exemption against their pension income only. So by virtue of the fact that your pension income is only $150,000, even though the maximum exemption is $207,530, you would not be able to utilize more than $150,000 of it because you're not allowed to utilize it against all your sources of income. Also, if that same person was, say, 60 years of age, and that person has pension income plus rental income, interest income, other sources of income, that person would not be restricted to, even if that person's pension income is only $150,000, that person would not be restricted in utilizing only $150,000 because the legislation allows for the pension exemption for a person who has attained the age of 55 years to utilize it against all sources of income. And we will take questions on that if you think at a later time, or you can type your questions in the chat. Now, the pension exemption, I preempted myself a while ago to say that the total amount for 2024 is $207,530. How did we arrive at that? Now, up to March 2024, the annual figure, the annual amount for the exemption, for the pension exemption was $80,000. As of April 1st, 2024, it was increased to $250,040. So like the threshold, what we do, we take 3/12 of the $80,000, and to that we add 9/12 of the $250,040. And so we arrive at the amount for 2024 being $207,530. And the monthly amount, if you were utilizing it monthly, you would see that for the January to March, the figure would be different. It would be $6,666.67, as opposed to that for April to December being 20,836.67. Now, the monthly figures have been presented for the benefit of those who would have been applying it in that way, right? But it must be borne in mind that pensioner is entitled to the full exemption for the year, irrespective of when they started receiving pension income. So to the extent that I start receiving my pension income in, say, June of the year, it does not mean that I would have missed out on the pension that would be attributable, the pension exemption, I beg your pardon, that would have been attributable to me for the periods January to June or January to May. Because once I'm a pensioner, once I become a pensioner in any year, I'm entitled to the full pension exemption. And I hope I've made that clear. So if you become, so it's not a case that you would have missed out on 5 months of the pension exemption. No, it is not necessary for it to be applied monthly. In fact, it could be applied at one point in the year, towards the end of the year. It does not have to be monthly, but we do understand that it is applied that way for some persons. And it's not, it's not that it is legislatively incorrect, right? But it is, once you observe the fact that the pensioner is entitled to the full amount for the year once the person is a pensioner. All right. So for the pensioner who is under the age of 65 years, for the year of assessment 2024, they would be entitled to pension exemption of $207,530, as well as the threshold. And I'm not here saying that the threshold is an exemption. The threshold is not an exemption. The threshold is the portion of a person's statutory income that is subject to tax at 0%. Right? And so what we're talking here about is the annual maximum tax-free entitlement to a pensioner who is under 65 years. Of course, if you're over 65 years, we'll talk about that later. There'll be additional exemptions that are available to you. So for 2024, the total amount will be $1,857,620. And you'll see that come 2025, that figure will be increased to $1,950,128. All right. So I'm going to take questions. If we have questions that we would like to verbalize here now about pension, the pension exemption, any questions? Viola? Go ahead, Miss Viola. Is it Viola? I don't want to mispronounce your name. Townsend? Thomas. Miss Thomas, go ahead. And please correct your, please say your name so that I won't mispronounce it again. Miss Thomas?
Yeah. Can you hear me?
I'm hearing you loud and clear, Miss Thomas.
All right. I wrote a question in the chat. I'm not sure whether it is relevant, but it's something I want to find out about. I want to find out when and why is a tax refund statute barred?
Okay, so if it is the limit of statute, the limit of the statutory limitation is for 6 years. Right. So after 6 years, we are not in a position to come and investigate your accounts. And so we are not in a position to be able to address any issue regarding, a refund or an additional payment. So it could be the other way around. So that's the statute of limitation for tax purposes is 6 years.
All right, I hear you. But if persons are able to produce documentation that they have in fact paid the taxes, but did not claim back for their refund, does it still fall under the statute of limitation where they cannot get a refund for those funds?
On the face of it, I would say yes. However, if you have a case to make, I would suggest that you reach out to TAJ and make the case. Because you see, for questions like those in a setting like this, you don't want to give a blanket answer because things could vary depending on the peculiarities of a particular case.
Understood.
So I'm not in a position to say definitively yes. All I'm saying is because it falls outside of the limit. Once it falls outside of the limit of
statutory limitation.
The statutory limitations, I beg your pardon, then, it would, on the face of it, not be payable. The refund would not be payable.
All right. Okay. I'll come in and have some dialogue.
Okay. Mr. Peart?
Yes, thank you very much. Will I be able to have access to this information, especially the PowerPoint, after the meeting? Or where can I find all the details? Because I want to sit down and look at it in detail.
In detail. Okay, we do have a technical advisory currently posted on our website. If you go to TAJ, www.jamaicatax.gov.jm, and you click on publications, then you will see at publications, and then you go down to technical bulletins. So you'll get a drop down with several items. You look for technical bulletins. And I assure you, the last time I checked, this was the first thing that you will see. That it's at the top of the list of our technical bulletins.
Technical bulletins. Thank you very much. And I can download it and look at it carefully.
You may.
Yes, thank you very much.
You are most welcome, sir, and thanks for your input. Lindo? Lindo, I am scared. I don't want to mispronounce your name. So.
Hearing me?
Yes, I'm hearing you, sir.
Thank you. I'm just seeking a clarification in respect to the exemptions, that if, for example, somebody was getting a pensionable amount of 40,000, for argument's sake, per month, would the new exemption result in an increase from 40,000 upwards?
No, it would not. It does not change your pension, the amount of the pension that you are getting. What it does, to the extent that you would be in a position 12 times 40 would be $480,000. And so that pension income at that level would not require you to pay tax, because you would notice that that is below the threshold, right? So it is only the pension exemption will benefit those who are required to pay tax. It will reduce the amount of tax that you're required to pay.
Yeah, but in the case of a normal employee who gets from 1.5 to 1.7, usually, even though it doesn't change their I mean, they're normally it would mean they have access to more income.
It does not mean that it does not increase the amount of income that the person earns. What it does, it's what, so the person who is earned, all right, when the threshold was $1.5 million, the person who was earning up to that amount would not have been required to pay any income tax. Now, to the extent that a person continues to earn, sorry, at that level, I beg your pardon. To the extent that a person continues to earn at that level, the increased threshold from 1.5 million to 1.7 million would not necessarily accrue a benefit to that person, because the threshold is never ever used to increase your income.
Oh, I thought the net amount, given that they would bill, the net amount would have allowed for more cash for the
All right.
employee.
Later
And
on in the presentation, sir, we'll be working an example to show you exactly how the threshold works. We'll be
okay.
looking at an example to show exactly how the threshold works.
Mm.
So I guess when we get to that point where we have that illustration, it will become clearer to you. But if you still have a question at that point, I'm going to ask you to raise it again.
All right. Okay.
Okay, then. All right, one more question before we move on. Miss Lewis, go ahead. Miss Lewis?
Hello, hearing me?
Yes, yes.
Pleasant good morning and thanks for this forum.
You
I
are most welcome.
I applied for early retirement because my mother is ill. And so I left in August, in September. How does this apply to me? Because I'm not really understanding. And then my former organization is giving me a runaround. You had some in-depth differences in dialogue because I also get some increment and whatever. So we are not on good grounds now, and therefore I am not getting any proper feedback. So how does it
Okay,
affect me?
so let us keep it to the main issues or what is related to what we're discussing here. You took early retirement. Are you in receipt of pension, your pension income?
I've not well, the organization is executive, so I've gotten that that part, but then those are also central government, and then I don't know what is happening there.
All right. Well, those are some issues though that we would not be able to address in this forum.
Okay.
Those are some issues. What we can say to you is that if it is that you are in receipt of pension income, you would be entitled to the pension exemption. And some of it though, again, that is a question that is not best handled in this forum, because then we would need to ask you some questions about your income earning sources, which I don't want to do in this forum.
Fine, no problem. Quite understand.
Right.
Okay then.
So, but we can, some of it seem to be, issues that need to be sorted out between yourself and your former employer. But when those have been sorted out, to the extent that, you still need further guidance in terms of your entitlement, by all means, please feel free to reach out to us and we will guide you.
One other question before you go. When is the age for retirement? Because I submit all the reasons why I had to leave, and then I was sent off, and now I don't know the age. What is the required age for retirement?
All right, so I do know that as a government pensioner, you may take early retirement at 65, at 55, but then
almost 58
no.
now.
All right. Miss, please remind me of your name.
Karen Lewis Atkinson.
Yes, Mrs. Atkinson. I would want to have a conversation with you one-to-one.
I would really like you to talk with me. So can I get a number where I can call you separately? Is that possible?
Okay. Your email, we do have your email. You can send me an email at colleen.williams@taj.gov.jm. So Colleen, COLLEEN
Colleen.
.Williams.
Hello?
Yes, so it's colleen.williams@taj.gov.jm.
Okay, thank you. Thank
Yes,
you.
that sounds like we need to have a one-on-one.
Looking forward to it. Thank you.
You are most welcome. All right, so we're going to continue. We'll take other questions later on, but let us just continue with the presentation. Okay. So we're going to be looking, so we looked at pension, the pension exemption, and we have said that you must be in receipt of pension income to be eligible for the pension exemption. Now we're going to be looking at how this is applied to a pensioner who may be permanently incapacitated. So pensioners who are certified to be permanently incapacitated will be allowed a pension exemption of 207 for 2024 and the same 250 and 250 for 2025. And this exemption, as we have said before, we're going to be saying it again for emphasis, it may be applied against the income from all sources. So if you notice here, the age, the person, once a person is permanently incapacitated, be it mentally or physically, and that person is a pensioner, regardless of the person's age, they can utilize the exemption against all sources of income. Now, for the person who is based on section 12(1)(y) of the Income Tax Act, the emoluments of an individual who is permanently incapacitated, the emoluments are exempt from income tax. So just bear that in mind. The emoluments of a person who is certified to be incapacitated, those emoluments are exempt. They don't pay income tax on that at all. They're not required to. And so we're going to, but bear with me, just walk with me, take it one step at a time, and because we're going somewhere here. We spoke about being permanently, being certified, right? In order to qualify for the exemption under 12(1)(y), the individual has to be certified by the minister responsible for Social Security on the advice of a chief medical officer to be a person suffering from a mental, suffering from a disabling permanent physical handicap or mental handicap, right? So the person, it's not just about seeing that the person has one hand or seeing that the person has one eye or is visually impaired. It is not enough to identify that to be the case. What we're saying here is that for the exemption to be granted, the person has to be so certified by a medical practitioner, right? And the details in respect of the certification process may be obtained, may be obtained from the Jamaica Council for persons with disabilities at 18 Ripon Road. So you can contact that unit and they will give you the step-by-step procedure for getting this certification. So we want to make, the point we're making on this slide is that you need to be certified. We had said before that the pension income, well, pension income falls within the definition of emoluments. So if you were to go to Section 2 of the Income Tax Act, for those who are so minded, pension income is a part of your emolument. And you will recall that about 2 slides ago, we said that the emoluments of a person who is certified to be permanently incapacitated would be exempt from income tax. So it therefore means that given that pension is defined, comes within the definition of emoluments, it therefore means that if you are a pensioner who is certified to be permanently incapacitated, the full amount of your pension is exempt from income tax. Let me say that again. For the person who is the pensioner who is permanently incapacitated, once you're so certified, your total pension income is exempt from income tax, regardless of how much it is. Whether it be it above the threshold or whatever it is fully exempt from income tax. So to the extent that that is the case, the pensioner would not be required to pay tax. So where the pensioner is certified to be disabled or incapacitated, let me use that word, they are otherwise able, you're not disabled. Where the person has other sources of income, they may utilize the pension exemption. Because if you are certified to be incapacitated, your pension, the full amount of your pension income would be exempt. You would recall earlier on in the presentation that I said that you pay tax on your statutory income. And the threshold is the part of your statutory income that is subject to tax at 0%. So if it is that the full amount of your pension income is exempt by virtue of the fact that you are certified to be disabled, it therefore means that your statutory income would also be 0. So if you are certified to be incapacitated, pension income is your only source of income, then you would not be able to utilize the pension exemption because you have no income to utilize it against. In order to benefit from these exemptions, to utilize these exemptions, you must have income to utilize them against. Right. So I'm going to ask this question now. My second question to you. Pension exemption is available to A, all pensioners. B, persons who have attained the age of 55 years and or permanently incapacitated. C, persons in receipt of payments from specified pension and or retirement schemes. D, all of the above. What is your answer? Stacy, go ahead. You're first out of the blocks. Stacy? Pension income is available to whom?
All of the above, sorry. I don't know if it's me.
Pardon me?
Is it me? Good morning.
Good morning. Did
All
you
of the
raise your
above.
hand, Stacy?
No, I didn't.
All pensioners are entitled to the pension income. That's your response, Stacy?
Pension exemption is available to all pensioners.
To all pensioners.
Yes. Persons
All
who have
right, so pardon me?
go ahead.
So your response is all pensioners.
No, I was saying all of the above. That's the first thing I said. All
All
the
of the above.
yes.
Oh, it's all of the above. Any other, thanks for that, Stacy. Any other response? Fitz, go ahead. Fitz? Mr. Gentles? Miss Brown? Elizabeth? Mr. Saunders? Pension exemption is available to whom? Mr. Bryan, your turn. Who is entitled to pension exemption? Okay, we're not. All right, we're going to ask Ms. McLeish and then we move right along. Ms. McLeish? Okay, so pension exemption, let's work through it together. Pension exemption is available to all pensioners. Is that correct? Anybody recalls what we said about persons who earn pension income from outside of Jamaica? Tyrone? All right. So what happens is that Tyrone?
Yes, this is Tyrone.
Yes, go ahead, Tyrone.
What you said about pension overseas, they're not exempted from the pension scheme. So the answer would be B.
The answer is what?
B.
B. You're saying the answer is B.
Yeah.
All right. Let's work through it then, Tyrone.
Yeah.
No, let's work through it. So it would not be all pensioners because we did say that pensioners, persons whose only source of pension income is from overseas, they are not entitled to the pension exemption. It's the exemption that we're talking about here now. Let us examine B. B says a person who has attained the age or persons who have attained the age of 55 years or is permanently incapacitated. Does that present anything to say that this person, do you have any information there to say that this person is in receipt of pension income? I don't think so. All it does, it tells you about the person's state. Remember, we said earlier on that the fundamental criteria for a person to be eligible for the pension exemption is that they must be in receipt of pension income. For B, there is nothing in that response to say that this person is in receipt of pension income. So it would not be B either. Let us look at D. And by that, you'll figure out what the answer is. Could it have been all of the above? No, because all of the above include A and B, which are not correct. And therefore, the answer is C. Persons in receipt of payment from specified pension and retirement schemes. So you have to be in receipt of pension from one of these two, from these schemes in order to be eligible for pension exemption. So I thank you all. I know some persons would have been queuing up to answer, but for whatever reason that did not go through. There are other opportunities. All right. So we looked at the pensioner who is permanently incapacitated. So if you know anybody who is a pensioner who is permanently incapacitated in any way, shape, or form, the encouragement is that you assist that person to get certified so that they can benefit from the exemption to the extent that their income would allow them to do that. So we're moving on now to the self-employed person who is permanently incapacitated. A self-employed individual who is certified to be permanently incapacitated and is in receipt of income from an approved retirement scheme is entitled to the pension exemption. Now, a person who is pension usually goes with, well, it does go with employment. So for the person who is self-employed, and when we speak of employment, we speak of employment on a contract of service. The self-employed is on a contract for service. So when the pension usually works with persons engaged on a contract of service. The person we're speaking about at this point is not that person. So the self-employed person would have been able to go to a Sagicor or a Scotia or one of those other entities that provide the services of an approved retirement scheme, and they would have been able to participate in that. So to the extent that at the end of their work life, or at the point where they start to get a payment from that scheme, they too are entitled to the pension exemption. However, I would have indicated before that the emoluments of a person who is certified to be incapacitated is exempt from income tax. Emoluments is in relation to employment on a contract of service. It is restricted to that. So to the extent that a person who is self-employed is permanently incapacitated, their other income. So say the person has rental income or they have some trade income, person is permanently incapacitated, that income would not be exempt from income tax. It is only if they have employment income that they would be exempt from income tax. But what we're saying here is that notwithstanding the fact that their other sources of income would not be exempt from income tax, they are still entitled to the pension exemption. And the amounts would be the same figures we have been discussing all along. Now, in addition to pension exemption, there's also another exemption known as the age exemption. And that is provided for in section 12(1)(ab) of the Income Tax Act. And it stipulates that an individual who is age 65 or has attained that age in the year is entitled to the age exemption. So for this one, for the age exemption, the only thing you need to do to be, the only thing that needs to happen in order for you to be entitled to it is that you must attain the age of 65 years. Once you have attained the age of 65 years, you are entitled to the age exemption. And in any year that you attain the age of 65, you are entitled to the exemption for the full year, even if your birthday is December 31st of that year. Once you attain the age of 65 years in any year, you are entitled to the age exemption. There is no prorating that needs to take place. And this exemption can be utilized against your income from all sources. And you would have seen a table which looks just like this when we were looking at the pension exemption, because the figures, the amount of the exemption for the pension is the same as it is for age. And so the method of computation is the same, right? And so the amount of the age exemption for 2024 is $207,530. It will, the amount you'll be able to benefit from the full amount come 2025, and that amount will be $250,040. And so the entitlement of a pensioner who has attained the age of 65 years is pension exemption, of $207,530, age exemption of the same amount, and your income tax threshold. So your total tax-free entitlement, once you have attained the age of 65 years, is $2,065,150 for 2024 and $2,200,168. But let me hasten to say that this is subject to the individual having sufficient income to utilize these tax-free amounts against. And somebody would have asked earlier if there's a credit situation or if the threshold, in applying the increased threshold, if it would increase your pay. And no, but we are coming closer to the point where we will show you exactly how these work. But the bottom line is you must have income greater than these amounts in order to be able to utilize the full amount of these exemptions. All right, so my third question, and I'm hoping persons will be able to unmute and speak with me. The age exemption, the question is, the age exemption is available to A, persons who have attained the age of 55 years, B, persons who have attained the age of 65 years, C, females who have attained the age of 65 years, D, retired persons. And I'm going to ask you now to indicate using your raise hand feature. Joan, go ahead. What's the answer? Please unmute.
Yeah, sorry.
Yes.
I think the answer is B.
Is B. Great. Thank you so much, June. It is indeed a person, any person, be it male or female, who has attained the age of 65 years. And let me just hasten to say that for the pension, for the person who is earning pension income from overseas, to the extent that you are 65 years of age, you would be able to utilize the age exemption against that income. You would not be entitled to the pension exemption because it is not a pension scheme that is being operated here in Jamaica, but you'd be able to utilize the age exemption if you have attained the age of 65 years. All right, so we're now going to be looking at some general information. some of the questions that would have been coming to us, especially since the changes would have been made, would be, do I need to apply to TAJ for permission to use the increased exemption or the increased amount of the exemption? And so that will be addressed in the next couple of slides. Now, some pensioners may still be employed because not everybody goes home at 65. 65 is the new 45. So a number of persons who would have attained the age of retirement, whatever that is, they may still continue to be employed. And so on the basis of proof of the employee's entitlement to pension and or age exemption, employers may utilize the revised exemption amounts in computing the income tax and other statutory deductions of their employees. So if you are still with your organization or still in employment, the employer may go ahead and utilize the full amount of the increased exemption. So they would have been utilizing the $80,000, the exemption at $80,000 for age and $80,000 for pension exemption. Now that it has been increased to $207,000 this year and $530, your employer may go ahead and apply the increased amount. You're not required to apply to TAJ for permission for that to be done. Also, where an individual who is entitled to the exemptions in question is desirous of appropriating them to income from multiple institutions, that individual must apply to TAJ for permission, right? For approval of the determined amount to be allocated to each of those entities. So if I am entitled to age and pension exemption, but I want a portion of it to be utilized against my income, my interest income from financial institutions, various financial institutions, or more than one financial institutions, then I would need to apply to TAJ because that now needs to be managed, because you don't want institution one to be applying the full threshold and the exemptions, institution two, because that is going to cause trouble for the pensioner or the golden ager. So we would like for you to, in such a situation, you are required to apply to TAJ for approval of the tax-free amount to be applied by each of those, your desired institutions. Where the pensioner has been utilizing the full amount of the pension and or age exemption against pension income, they are not required to apply to TAJ for the increased amount to be applied. And so for my pension providers, right, those persons who pay pension, please pay keen attention to this. You may go ahead and apply the increased amount once it is that the pensioner would have been utilizing their pension exemption and or age exemption exclusively against their pension income. So to the extent that it was shared before between the pension income and something else, then these persons, those individuals would need to apply for approval. Right? But outside of that, once you are the only entity that would have been applying the exemption, you may go ahead and apply the increased amount. Also, on the basis of proof of the pensioner's entitlement, the administrators of pension fund may utilize without approval. Yes, that's what I had just said. Pensioners for whom TAJ had previously granted approval for the prorating for a prorated determined amount are required to apply for a revised amount. So the bottom line here, ladies and gentlemen, is that once it is being used exclusively by your pension fund administrator, you don't need to apply for permission to utilize the increased amount. Or if it was being used in relation to employment, you don't need to apply. But to the extent that you need, you are desirous of using your entitlement to the exemptions and your threshold at more than one institution, then you need to apply to TAJ. Now, just in case, for the few who will need to apply, we have here, and some persons would have done it before, and they might be familiar with the requisite documents to make the application. But there might be others who may not, want to utilize this facility. In order to, you'd make the application to Tax Administration Jamaica. I'll tell you how, but the documents that you will need are your TRN, your proof of age, a government issued ID, proof of current pension income, your proof of other sources of income, name and address of banks or financial institutions and account numbers. This is where you want to utilize it against interest income. And there is what we call the PO1 exemption form, which is one of our forms. It is on our website. You would find the PO1 on our form, but you'll find that this only is necessary if you're applying for the exemption in line. So let us talk about the ways in which you may apply. The preferred application method is online. So you may apply for the exemption if in a case where you want to utilize your pension exemptions as well as your threshold, that tax-free entitlement at multiple institutions, then you need to apply to TAJ for that determined amount to be approved. We're saying that that application may be made online or inline, and we're going to be talking about the online method first, which is really the preferred method. So it would be done at www.jamaicatax.gov.jm, but you're going to need some assistance. If you don't already have an active e-services account, you would need to have that. And so Tax Administration Jamaica stands ready to assist you with that. And you may reach out to our customer care center at taxhelp.gov.jm or call 888-TAX-HELP. And we have the number there. It is 888-829-4357. Or you may visit any one of our taxpayer education teams at any one of our revenue service centers. Now, our revenue service centers are located in Mandeville, Montego Bay, Kingston, St. Andrew, but we also, if you reach out to any tax office, they will be able to provide some assistance to you. But you would need, in order to make the application online, you need to have an active e-services account because you need to log on to input data on our tax portal. And the only way you're going to be able to do that is to have an e-services account. So if the application is being made online, you would also need to have the required documents that I mentioned before, the TRN, the proof of age, proof of income. You would need to have those scanned and saved to your device, because you'll need to upload those when you're making the application on the tax portal. Of course, you would not now need to do a form, a physical form. So that's the only exception. So it would be all the documents that I would have mentioned before, and I'll just repeat them. I'll just go back to the slides for your benefit. So you would need to have your TRN, proof of age, government issued ID, proof of current pension income, to the extent that you have pension income, proof of other sources of income, name and address of banks or financial institutions. Right, so that would be it if you're doing it online. If you're doing it inline, it would be all of those documents plus the completed PO1. You can go to our website and download the PO1. Right, so the inline applications are processed at our revenue service centers, which, as I have said to you before, are located in Kingston, St. Andrew, Mandeville, and Montego Bay. However, the application may be dropped off at any tax office. So we're not going to ask you to travel long distances to find one of these revenue service centers. You drop it off at your tax office. You ensure that the receipt of your request, your application, has been acknowledged, so you have proof of the application having been submitted to a TAJ office. All right, so we're going to now be looking further at the income tax threshold and pension income. How does it impact the pension income? Now, we have said before that pension falls within the definition of emoluments, right? We have said that before. And the legislative authority for that is in Section 2 of the Income Tax Act. Now, the second schedule to the Income Tax Act stipulates that the payer of emoluments has responsibility to withhold the tax due, remit same to TAJ on a monthly basis on an S01, because it is emolument, and S01 is what the related taxes are to be remitted to TAJ on, not anything else, and a final return. This now would be for the benefit of not the pensioners per se, but the person who administers pension funds. The method of reporting the tax to TAJ is as follows here. You withhold the tax due, you remit it on an SO1 monthly, and you file annual return declaring the details of the emoluments paid to each employee. Because the pensioner is really an employee, they're receiving emoluments, right? And the Income Tax Act defines an employee as anybody who is in receipt of emolument, and pension income is emolument. So even though the pensioners, they are not current employees, some of them currently, from a tax standpoint, they would be classified as employees by virtue of the fact that they are in receipt of pension income, which is an emolument. Now, in computing the tax due in respect of pensioners, the pension fund managers are required to account for the threshold to the extent that it applies, right? They may also account for the relevant exemptions upon proof of the pensioner's entitlement. But all this should be done through a payroll system. Where the pension fund manager is notified by TAJ of an approved tax-free amount, that is to be taken into account in computing, in the computation, instead of the exemptions and the threshold as stated above. So it goes back to something that we had said earlier on. The pension fund managers are required to compute the tax, and they are required to pay over. But the pensioner may ask that the pension exemption or the pension and age exemption, as well as the threshold, be allocated to more than one entities. So to the extent that they want just a portion of it to go against their pension income, the pension fund managers should go ahead and utilize the figure that would have been communicated to them by TAJ on an approval letter instead of the pension exemption and the threshold. And I trust that that is clear. All right, I'm going to stop here and take a few questions before we proceed. Marjorie? Go ahead.
Yes, thank you so much. You mentioned about the pension administrator. I'm hoping that the age exemption information will be passed on, because the last time I spoke to my administrator, which is VMBS, they said that nothing is automatic. I have to write to TAJ. So I hope the information about age exemption, it is automatic and I don't have to apply to TAJ. I hope that information will be passed on.
So is it that, but is, sorry, is it that you were utilizing it elsewhere though?
No, I just called for information pertaining to the increase in tax.
Right. So once you prove to them that you are of the age, they may go ahead and
but I'm assuming they know my age. Because
that is between, that's a matter that will be worked out between yourself and them, I am sure.
I will call them. Another question is, when are we expected to get the increase?
To get the increase?
Pension increase. I didn't see any increase.
All right. Okay. Are you asking about the increase in pension or the increase in the pension exemption?
Well, whichever you need to explain, either, whichever.
Okay, what we're speaking about here today is the increase in the pension exemption.
The pension exemption I'm talking. I get the impression that come at the big end of April, all pensioners will see an increase in the amount that they get.
Okay, that probably needs to be clarified, because the exemption is not intended to increase the income. What the exemption does is it increases the tax-free entitlement. So if you were getting, say, $120,000 prior to the increase in the exemption does not automatically increase that income figure. So say your pension income would have been, we're going to get to figures, but just a rough estimate here. Your pension income would have been $200,000 per month. It therefore means you would have been in receipt of pension income for the year of $2.4 million. Now, up to last year, you would have been entitled, say you're a pensioner who is over the age of 65 years. up to last year, against that $2.4 million, you would have been entitled to age exemption of $80,000 and pension exemption of $80,000. As of this year, your pension exemption would not now be $80,000 anymore, but for 2024, your pension exemption would be increased to $207,530. So it would see you paying less tax. So the exemption does not increase your pension income in and of itself. What it does, it increases the tax-free amount of it. So to the extent that you were not required to pay tax before the increase, then the increase will not necessarily result in an increased pension income. It is not increasing the pension income. What has increased is the amount of the pension income that will not be subject to tax. That is what has been increased.
Okay, thanks.
Okay. Ms. Ferguson, go ahead. Ms. Ferguson? Yes.
Hi, can you hear me?
Yes, I'm hearing you now.
Perfect, thanks. So 2 questions I have. Can you just clarify? I know you said it at the beginning, and I think this is what is causing some confusion here. Let's use an example. If my net, so not net, if my gross pension is $100,000, what you're saying is the pension exemption that applies to my net or my gross. So in essence, is my 100,000 taxable? So when you talk about the, what's the term you use? You talk about the statutory income.
Statutory income.
So that is what I need you to clarify, because I think
right.
And
like, go
sorry,
ahead.
I'm just saying, hearing some of the questions says to me, this is what I need to understand, because in essence, what you just said should result in an increased amount if I was not getting the maximum exemptions. Because if I am paying or exempted from more of my income now, then ultimately I should see a little bit difference in what I get in my bank account, right? So can you clarify exactly, is my gross amount taxed? And then
no, you
just
don't
100,000.
Right, you don't pay tax on your gross income. You pay tax on statutory income. And the statutory right, go ahead.
Which is, so define the statutory income again, please.
Statutory income is your gross less all allowable exemptions and deductions. So for the person who is getting $100,000 per month, it means that your annual gross is $1.2 million.
Yes.
Right?
So when you talk about the exemption, that is applied to, so my gross is 1.2 for the year, right?
Yes.
And based on the figures you're giving me, just as an example, if I have an exemption of $20,000, that is not applied to the 1.2, that is applied after, that is applied to the statutory income, is that correct?
If it is that you are earning $1.2 million for the year, you would not be required to pay any tax at all.
Oh, so I have lots of money to get back then. Okay.
You should not be paying any tax at all.
Got you. Now, my next question quickly is, you mentioned before that depending on the organization from which you get the pension, they should be aware of the exemption limit increases and apply that. So if you notice that has not been done, at this point, you would need to apply to you guys.
Okay, but let us be clear though. The exemptions, the increase in the exemptions really will, that it's the persons who would normally be required to pay tax that
Mhm.
will see, that will be able to utilize the benefit of the increases here.
Yes, and I understand that. Okay.
Mhm.
One last question. When you talk about pension, which I know what that is, but you have a lot of people who also get a pension from, is it NIS or the government?
Yes,
Does
so
that
that
come
would be
into
a statutory pension.
Okay, so that comes into play here as well. So if you're getting that plus something else, would you add that into your gross amount?
Right. So what would happen if you are in receipt of pension, if you are in receipt of NIS pension plus another pension from another source,
Mhm.
then individually, neither of those institutions would apply the pension exemption or the threshold, because it could be that in both instances, you are below the threshold. Right? You're below, you're not required to pay tax based on the level of each of those individually. But when you put them together, it could be that you may be able to benefit from the exemptions and the threshold. But let me just, I'm going to get to a point where we do a computation and you will see. I guess when we get to the figures, it will help to aid the understanding.
Okay, I appreciate that. So my only issue is the net and the gross when you talk, just to be specific.
Yes, we will definitely look at gross, statutory. We will look at threshold. We will look at all of those things being brought, all of those terminologies that you hear me using in relation to the computation. We will be bringing all of those together to show you exactly how they interrelate.
Thank you.
You're most welcome. Nardo, go ahead. Next person.
Can you hear me? This is
Yes,
Narda.
I'm hearing you now.
Okay. Would the NIS pension scheme qualify for the pension schemes that you were talking about, the statutory pension scheme?
Yes.
That would be a part of it. Persons who are
would.
getting pension from that scheme will be able to access the age and the other benefits of the exemption.
That's right.
Okay. Thank you so much.
And if I may, or is there another question before I go ahead? Lennox, go ahead. Please unmute and speak to me, Lennox.
Okay, I was just given the privilege. Yes, I've been constantly and being lowered. Are you hearing me?
Yes, I'm hearing you.
Okay. With respect to like interest income that has already been deducted after age 65, is that something that is recoverable or it just goes forward?
The exemption, you're saying, I'm trying to follow what you would have earned interest income to which the exemption would not have been applied.
Right.
All right.
But based on what you're saying, that should have been exempt. So
right. So as long as the year is not statute barred, you may file a return and bring all your sources of income together and apply for the and take the exemptions on your return.
Okay. So it would mean doing an income tax return for all of those years
To the
submit
extent that they are
that,
not
and the
statute barred.
document we're taken to
Yes.
each institution.
To each
Right.
institution, no,
What is
the
what is
institutions would have, all right, so in essence, you'd be applying to TAJ in order to recover anything that would be due to you, you would be required to apply to TAJ because those institutions would have
Right.
already remitted those funds to TAJ.
That's
So
correct.
to the extent that you are entitled to a refund, you would be required to make a return to us, and then it
Sure.
would be processed from there on. But when you're making that return now, it's not just the interest income that you would include. You would be required to include your income from all sources. And then you get to
Right, it's
take
income, yes,
the
returns for each year.
threshold and all the exemptions that you're entitled to against your
Sure.
sources, your income from all sources.
Sure.
Sure.
In that respect, I don't know if something you're going to deal with, but didn't mention like income from a business, like a small business.
Okay, so I
how do we
am
calculate
going
that? Would that
to,
be on?
all right.
Go ahead.
Thanks for that. I think you have segued into the next slide that I have
Okay.
to cover.
All right, thanks.
Okay, thank you very much. Velma, one lad. So we'll take Velma and then we move on. And then at about 11:15, we will take a 10 minutes break. And some of my generous colleagues here have said 15. They are more generous than I am, eh? But that's good. The teamwork is dreamwork. So at 11:15, we will take a 15 minutes break. So Velma, go ahead with your question.
Yes. Are you hearing me?
Yes, I'm hearing you.
Yes.
We'll just, sorry.
I'm not, thank you. I'm not too clear on who should submit an application. Is there an automatic measure used for, say, persons who are working with the Ministry of Education? Is it worked out for those people, or does everybody have to submit an application?
All right. Let me try to work through that one. You are, the person is employed to, the pensioner
the
or
government.
the manager is employed
Yes.
to the government.
Yes.
Oh, your background is a little noisy.
Oh. I'm sorry. Thank you. One moment.
All right. So
is it better now? Is it better now?
Yes, it is.
Oh,
it is better.
Okay.
Right. So you are employed to the government. You are in receipt of pension income.
Yes.
You have attained the age of 65 years.
Yes, both exemptions would apply.
Both exemptions would be due to you.
Yes.
So your employer should go ahead well, they should have proof of your age, but they could ask you to provide proof of your age and proof of the fact that you're in receipt of pension income. And by virtue of that, they may go ahead and apply the exemptions. You would not need to apply to TAJ for permission to utilize the exemptions.
Oh, so that information would have to be sent to the employer.
I was hoping that some of them would have been okay. All right. So that needs to be communicated to employers. I take that point. So we'll see how best we get that message out.
Okay. Well, thanks a lot.
But let me say though that you can instruct your employer, or not instruct, but advise them, inform them that there is a technical bulletin on our website that explains all of that.
Okay.
So the information is already out there. It is on our website.
Oh, great.
So for all persons who have that concern, you can now you may direct your employer to that technical bulletin on our website.
Excellent. Thank you so much.
You are most welcome. All right, since we're at 11:10, rather than continuing with a new area, into a new area, we'll just continue to take questions until 11:15 when we break for 15 minutes. Janet, go ahead. Janet, are you with us? I ask you to mute and speak. Unmute.
Hello.
Yes.
Yes, so good. I thank you for your presentation.
You are most welcome.
I guess what everybody wants to know is if you'll have more money in your pocket after all of this is over. So that is why this whole matter of net and gross, yes. But I guess I understand what you're saying.
Sure, thank you very much. And we're going to be putting figures to all that is being said.
Right, so that was a comment.
Okay, so I thank you very much for your input. And you know, I am happy that you're in tune with what is happening and you're paying attention. So when I get to the point where we actually work figures, then, you know, to the extent that there's any question that is still unanswered, we will take them there.
Right. So my question now is, I hear you talking about utilizing pension exemption, this utilize, and how am I utilizing? So tell me if my deduction is correct. You are saying if the deduction, the ceiling to the deduction, the exemption deduction is $270,000 per se, and I am working, I'm getting a pension, and I am also getting an income from another source, that 270,000 is to be spread across the two pensions. Is that what you're saying?
All right. So what that may mean for some pensioners is that they need to file a return in order to benefit from the exemptions. Because if your pension income is not of such that would require you to pay tax, then the pension exemption is not going to be given there.
Right.
So in order to benefit from the exemption, you may need to bring all your sources of income together and then take all the entitlements against the combined sources.
Okay. Thank you.
And let me say, before I take any other question, that if you are, say, a NIS pensioner, you're in receipt of NIS pension, that's your only pension income. You are over the age of 65 years. And that this is one scenario, because there are many scenarios that can be looked at here. So if you are an NIS pensioner, that's your only source of pension, you have no other source of pension income, and you are over 65, you are entitled to both the age and the pension exemption. To the extent that you have other sources of income, all is not allowed. The fact that your pension income is not sufficient for you to utilize those exemptions against, by virtue of your age, you may utilize those exemptions against your other sources of income.
And by utilize, you mean to say you spread it across.
Right, so you would be required to file a return, bring all your sources of income together, and then on the return, you would be allowed to take the age exemption and the pension exemption as well as the threshold.
Okay. All right, thank you much.
You are most welcome. So we're going to be breaking at this point for 15 minutes. And we ask you to come back, in 15 minutes time, where we will continue with the program. And that would be about 11:30 by my watch. Thank you very much. Enjoy your break. Welcome back, ladies and gentlemen. I trust you would have been refreshed and you're ready for the second leg. Okay, so before we went off, I was at the point of saying that to the extent that your pension income would not be sufficient for you to benefit from the pension exemption or the age exemption, when you combine your income from all sources, you may be able to benefit from them in that way. So we're now going to be looking at the income tax threshold, the exemption and the exemptions in respect of self-employment. Now, the self-employed individual computes his income tax liability for the year. Therefore, he or she may utilize the full amount of the applicable exemption, that is age and pension, in arriving at his statutory income. The full amount of the tax threshold for the year against the statutory income, and that will all make sense to you in short order. But what this is essentially saying is that for the person who is self-employed and you're in receipt of pension income, so you could be self-employed and say you have self-employment income of $3 million and you have pension, NIS pension income of say $300,000. You may, when you combine both of them, you will be able to utilize the full amount of the threshold, as well as, so the threshold would be 1,700,088. And you, in addition to that, you would be able to also take as a deduction the $207,530 for age exemption and the $207,530 for pension exemption to the extent that you qualify for both. That would see you paying less taxes, right? Even in respect of your self-employment income. Now, for persons who are self-employed, they are able to utilize the tax-free amounts against their S04A. And for those who are filing returns, you'll be familiar. That is the estimated income tax declaration that is made by a self-employed person on the 15th of March each year, or the annual income tax return, which is also filed at that time for the previous year. Now, for self-employed persons who would have already made their estimated declaration for 2024, you may amend that declaration to utilize the increased threshold. So you may have made your estimated declaration and you would have applied a threshold, an annual threshold of $1,500,096. Now, given that it has been increased and the effective amount for this year is $1,650,090, you may amend that estimated declaration to reflect the revised amount. All right. So we're going to be going now to some scenarios, because I think the scenarios will help to aid understanding. So scenario one, and again, remember, we're asked that you respond, you respond to these scenario. You provide the responses by way of using the raise hand feature, and you'll be acknowledged. So scenario one, in year of assessment 2024, A 70-year-old pensioner who is resident in Jamaica has the following income streams. Now pay keen attention. The person is 70 years old. The person is a pensioner. The person is resident in Jamaica. They have pension from UK of 3.5 million Jamaican dollars. They have rental income in Jamaica of $6 million. And they have director's fees of $1.2 million. You are required to state the exemption or exemptions that this person would be entitled to and the amount. Based on the scenario, you are required to indicate to me whether the exemption or exemptions to which this person would be entitled and the amount. So here we go, raise hand feature. Grace, go ahead. Grace? Are we back from break? Doreen, go right ahead. Doreen, could you please unmute your mic and speak? Brown, is it Louis? Louis Brown, or I'm not sure if it's Loy. I'm not hearing. Miss Harris, go ahead, unmute your mic and talk to me, please. What exemptions would this person be entitled to? Exemption or exemptions?
Okay, I was not clear on what you just said. I had asked a question in the chat, in the Q&A, regarding someone who is over age 65 and only getting the NIS pension. You had said something about that person being allowed to utilize both the pension exemption and the age exemption.
No. Okay, well, let me clarify that for you.
Okay.
Remember, we said that in order to be eligible for pension exemption, you must be in receipt of a pension income. So if you are not in receipt of pension income from one of the specified sources in Jamaica, then you are not entitled to the pension exemption. So if you are an NIS pension, if you are an NIS pensioner, you are in receipt of pension income.
Okay.
So if you are in receipt of pension income, if you are receiving NIS pension, you are a pensioner.
Okay.
So depending on your age, you may also be entitled to the age exemption.
Right, I know. I had mentioned over 65.
Yes, so you would have met the criteria for both exemptions.
So you had said something about, I was not clear whether you're saying we could file separately, one for the NIS pension and the other, sorry.
All right, so let me try to.
Okay, and the other for other sources of income. I'm trying
No,
to.
so when the individual who files a return is required to account for their income from all sources. The person who is resident in Jamaica, who files a return is required to account for their income from all sources. So on that return, Say you file an S04, which is what the self-employed individuals are required to file. When you file that return, you would account for your income from self-employment. Say you're operating a business, right? And you have trade income. You would account for your trade income on that return in addition to your NIS pension.
Okay, so both will be put together.
Right.
And you make one filing.
One filing, and on that one filing, your tax would be computed based on the exemptions and the threshold that you're entitled to.
Okay, which will be the age and the pension exemption.
Age and the pension exemption. Yes.
Could you repeat the amount you had said per year? You said 1
All
million.
right. So for the amount, the minister, all right, up to March 31st, 2024, the amount of the age and pension exemption would have been $80,000 each.
That is what, per month?
Per annum.
Per annum, okay.
Yes, it was $80,000 each per annum. Effective April 1, 2024, those exemptions would have been increased from $80,000 per annum to $250,040 per annum.
$250,040.
Right. So as that, well, say, let us take, for example, the year of assessment 2023. You were, if to the extent that you would have been entitled to both age and pension exemption, your total exemption would have been the total of those would have been $160,000 that you'll be able to utilize. Now, for 2024, right? It is not 2 times 80 that you'll be entitled to for 2024, but 2 times 207,530. And if my math serves me right, that's about $416,000 roughly. So you're moving from 160, from an exemption of 160 to $416,000.
16.
Yeah, so it's
okay per annum.
415. Yeah, so roughly $415,000. So the total exemption, to the extent that you are entitled to them, would have increased from $160,000 in 2023 to roughly $415,000 in 2024.
Okay.
Right. And that is in addition to the threshold, subject to the fact that you have sufficient income to utilize all 3 against.
Okay.
All right. So thanks for that. And I trust that matter has been clarified for you.
Yes, I think so.
Okay. So back to the scenario now, I'm asking, it reads, in year of assessment 2024, a 70-year-old pensioner who is resident in Jamaica has the following income streams: pension from UK of 3.5 million, rental income of 6 million, and director's fees of 1.2 million. State the exemption or exemptions to which he is entitled and the amount. Cassandra, go ahead. Sandra, not Cassandra. I have a sister who is Cassandra.
All right, can you hear me?
Yes, Ms. McLeod.
Right. So looking at this, this pensioner would not qualify for any exemption on his UK pension, but he is over 65, so he gets an age exemption, but he could apply that to his total for the others, his rental income and director fee. He could apply that to that. Is that correct?
Okay, you are on the ball. I just wanted to point out, though, that there is no restriction. What you are correct in saying that the person would not be eligible for pension exemption, and that the person, by virtue of his age, would be eligible for the age exemption. You are correct. But the age exemption, it is not restricted to any income stream. Once you are entitled to age exemption, it can be used against your total income stream. So just that I wanted to clarify, because if the figures change, it could have implication for that. Right? So all I'm saying is there is no restriction in the usage of age exemption. You use it against your income from all sources.
Okay. Okay.
All right.
Got that.
Okay, thank you.
All right.
All right. So we see here where the response is that the person would be entitled to age exemption of 207,530. All right. This one here now reads, scenario 2, John Mark is 50 years of age. 50, pay attention to his age. He's 50 years of age. He's certified to be permanently incapacitated. For the year of assessment 2024, he is in receipt of interest income of $15 million, as well as income from other sources, not including emoluments. So he's 50 years of age. He's certified to be permanently incapacitated. He has interest income of $15 million among other sources of income apart from emoluments. Does he qualify for any exemption? Justify. Does he qualify for any exemption? And you don't have to respond in respect of all the exemptions, but we have spoken about different exemptions here this morning. So you may raise your hand to say whether or not the person is entitled to any one of those. Doreen, go ahead. Doreen, please unmute your mic and speak to me. We have to get the issue of the entitlement clear. Who is entitled, who is not? Aileen, go ahead.
So I don't see here where he is getting pension from any source. So if he's not getting pension, I would say no, he doesn't qualify. It does mention the fact that he's certified, but is he getting a pension? So
okay.
I would say no. But if he were getting a pension, then I would say something different.
Okay, thank you. So you have spoken to the pension exemption. You're saying he's not entitled to it, and I would want to agree with you on that. I'd like for somebody else to tell me, thank you very much for that, for your contribution. I'd like for somebody else to tell me about the other exemptions. Idris, go ahead. And I hope I'm not butchering your names. Please forgive me. It's not intentional. Idris? Jennifer, go ahead. Please unmute. Nadia or Nadia, Scott? All right. All right, so Miss Chambers, it's your turn. Is he entitled to the age exemption? All right, go ahead, Miss Sylvia. Not sure why I'm not hearing from my participants. Sylvia, go right ahead. Okay. All right. So all right. So let us proceed. John Mark is only 50 years of age. So based on that, we would say that he is not entitled to the age exemption. As one of the participants had said before, there's nothing here in the scenario to say that he is in receipt of pension income, and therefore he would not be entitled to pension exemption either. And his income from other sources does not include emoluments, and therefore he would not be entitled to the exemption under 12(1)(y). So he is not entitled to any of the exemptions. All right. I would like for the participants to indicate if they're having a challenge on their side, because we realize, or is it just a change of heart, change of mind? Why we're not getting the responses coming through. Guys, this is about you. This is about you, and I want you to leave here with clear understanding as to the entitlements and as much as you possibly can take away from this session. Okay. All right. So scenario 3. Miss Wright is 65 years of age. Pay attention, 65 years of age. Certified to be permanently incapacitated and in receipt of pension income of $2.5 million from an approved pension fund, as well as rental income of $8 million in the year of assessment 2024. So she has 2 sources of income. She has pension income as well as rental income, right? She is certified to be permanently incapacitated. She is desirous of getting clarity on her exemption entitlements. Advise her. Who wants to start the ball of rolling? No, you don't have to tell me of all the exemptions, but I want you to try to process it. If you are so minded, you may. I will not, but I'm not going to pressure you into thinking about all the possible exemptions. If it is that you are clear about one, let me know what you think. Is Miss Wright entitled to any exemption? Miss Chambers, go right ahead. Are you having challenges on your side, ladies and gentlemen, unmuting? Marlene? Marlene, I think I hear you.
Good morning. Yes.
Yes.
Yes. I think you said that this person would be able to get all the tax exemptions once certified that they are so.
All right, so treat with them one at a time for me, please. Would she be
Wow.
entitled to the age exemption?
Yes, she would be able to get the age exemption.
Why? On what basis?
That she's 65 and
She's
receiving.
65. Right.
Right.
So just that the age exemption is just because she's 65.
Right.
Right.
And the pension
yes.
The pension exemption, she would be able to get that as well because she is incapacitated and she's getting the pension as well.
Okay, so first of all, I want you to reverse the positions there. She is entitled to the pension exemption because she is in receipt of pension income.
Pension. Right.
Right. Because she is permanently incapacitated, there is something else that is available to her. Anybody else, would you care to take that one, or would you want to pass the baton to somebody else?
Let me pass it to somebody else. Thank you.
All right, good. But thanks for your input. You have been, correct in your response.
Thank you, so.
Yes. Grace? Grace, go ahead. Grace, you have been trying. Is it that you are having a challenge unmuting? Sandra, go ahead.
Yes, I'm here. The first thing I wanted to say, I think people are not clicking the unmute when you call them. That may be what is happening there. They're not too sure what to
They're
do.
speaking without unmuting.
I think so. I get the feeling. Anyway, that was really what I wanted to say. But now that I'm at the question,
yes.
because Miss Wright is disabled, permanently disabled, she gets both her rental income and the pension income and pretty much all the income. There is, I don't know what you call that one, some other, like a total, she doesn't pay any taxes. It's tax-free.
Well, thank you for that. All right, don't leave me now. Don't leave me here all by myself. Stay right there with me. Is the rental income considered to, all right, we did say that the person who is permanently incapacitated, they get exemption in respect of their emoluments. Following, you're with me still?
Right, that would be her pension income.
And we did say pension income is emolument, is considered to be an emolument.
Right.
So the pension income would be exempt.
But not the rental income.
Is the rental income considered to be emolument?
I guess not.
No, I want you to say it with confidence. It is not. Remember, we said that emoluments are in relation to employee-employer relationship.
Right.
It is paid in respect of an employee to employee-employer relationship. So the fact that you have rental income, that's not considered an emolument. So even though this person is certified to be permanently incapacitated, this person would not be entitled to exemption in respect of the rental income.
Okay, got it.
Right. Okay. So we would have covered 3 exemptions that this person would be entitled to. They would be entitled to the age exemption by virtue of her having attained the age of 65 years, she would be entitled to the pension exemption by virtue of her being in receipt of pension income from an approved source. And because she is certified to be permanently incapacitated, her entire pension income would be exempt because that is considered emolument. Right? So those are the 3 exemptions. Now, if the pension income is fully exempt, it means that the other exemption that we spoke about, the other exemptions that we spoke about, the age exemption and the pension exemption would now be allowed against the rental income.
Right.
Is that clear?
Yes.
Because the total pension exemption, the total pension income would be exempt. So that would be removed from the amount of the person's income on which tax would be calculated. If the pension income was the only income that Miss Wright had, she would not be able to utilize her age or pension exemption, even though she is entitled to it, because she wouldn't have any income left to utilize it against. But the fact that she has another source of income, the fact that she is over 55, she can now utilize the pension exemption against her other source of income and her age exemption against her other source of income as well. I trust that that has been clarified. And this is exactly what, I know this is small print and I'm not going to pressure you to try to read it, but it is saying exactly what I have just said. So she'll be entitled to the full pension on the pension, the full exemption on the pension income under section 12(1)(y) that we spoke about, and then the pension exemption as well as the age exemption. We're coming to the computation, ladies and gentlemen. I know many of you were sitting and waiting for us to get to that part for you to get clarity on that. So never mind, we're coming to that. Scenario 4. In 2024, year of assessment 2024, Mary is 45 years of age. So she's 45 years of age this year. She has pension income of $150,000 and salary of $1.8 million. All right. So her pension, you are to state whether or not she's entitled to any exemption. If so, how much? That's the first thing. And then secondly, would her entitlement be different if she is 60 years of age and had the same income stream? So let us treat with the first requirement first. The first requirement. State whether or not she's entitled to any exemption. She's 45 years of age and she has pension income. Is she entitled to any exemption? Raise hand feature, please. Lawrence, go right ahead. Lawrence, please unmute.
Hello.
Yes, sir.
Yes, I had my hand up sometime before, so and I know you had sort of moved on.
Yes.
So I'm not sure if I could still ask the question that I had before.
Oh, so you're not responding to this, you're asking a question.
No, I had a question, so I had a burning question sometime before, but you have since moved on, so I wouldn't want to hold you up or to take you back.
Oh, no, I'll take the question. I'll take the question, Mr. Lawrence. But
okay.
Would you allow us to just go through this particular
Yes,
scenario
go ahead.
and then I
You
will
can
take
come
the
back to me.
question?
I would
Yes,
appreciate
so
it.
right after this scenario, we're going to take, so keep your hand up, or what
Okay,
is
will
the best
do.
thing to do?
Will
Keep
do.
your
Thank
hand
you.
up. Right
Thank you very
after
much.
this. Yes, we'll come right
Okay.
back to you.
Thank you.
You're most welcome. Valerie, go ahead. Is she entitled to any exemption? If so, how much? Valerie, please unmute. Miss Johnson?
Are you hearing me?
Yes, I'm hearing you now.
Yes, I think she would get a pension exemption on the $150,000, but not
Okay.
age because she's below the age.
She's below the age of 55 years, and therefore her pension exemption can be applied against the pension income only.
Right.
Okay, thank you for that. You are indeed correct. So would her entitlement be different if she was 60 years old?
No, it would not be any different. It should have to be 65 before you would see a difference.
All right. So all right, just before we think of the other exemption, the age exemption that you're alluding to, let us stay with pension exemption. You did say because she has not attained the age of, or, I understood that you were saying that because she is, in the first instance, because she is below the age of 55, her pension exemption would be restricted to her pension income. That's what you said, right?
Yes.
So in the second instance, she is above the age 55. Would that make a difference to her pension exemption?
Yes. So she will get another exemption, age exemption.
All right. Okay. Thank you very much. Anybody else want to make an input? Thank you very much. Thank you very much. Marlene? Please unmute and speak. Sharon, go ahead. Would her entitlement be different if she was 60 years old? We said that because she is 45 years of age, her pension income is restricted, her pension exemption is restricted to her pension income. Now, if she was 60 years old, what difference would that make in respect of the exemption that she is able to take? Sandra, go right ahead. I know you have the right answer, Sandra. All right. So moving right along, her entitlement would be different. It would not be restricted to the pension income only. So Miss Mary here would be able to utilize in 2024 the total pension exemption of 207,530 against her total income from all sources because of her age. Remember, we said that if you have not attained the age 55, the pension exemption is restricted to your pension income only. But if you are above age 55, then you may utilize it against your income from all sources. And that is what is being said there. I would like to find out though, ladies and gents, is it that you're having a difficulty on your side, and I'd ask you to just type in the Q&A, or is it in the Q&A? If you're having, type in the chat if you are having a difficulty, because we need to know. And I don't think it is a case that you'd want to just not respond. So we need to know if you're having a challenge on your side. You're asked to click the join with audio option. And that will give you access to your microphone. All right, so moving on to scenario 5. Lorna Lowe is employed to Health and Wellness Limited. She attained the age of 65 years in March 2024 and started receiving her pension income in September of the same year from an approved pension fund. Is she entitled to the age or pension exemption? In 2024, that is. Any takers? Karen?
Good afternoon. Are you hearing me?
Yes, I'm hearing you, Karen.
Oh, beg your pardon. Okay, fine. I was raising my hand repeatedly previously, but the action was not being recognized. I was just about to exit and then ensure that I joined properly with mic or something. Right.
Okay.
I think I got a little distracted. Did we get a response? Did you get a satisfactory response to scenario 4? Because I was trying to respond to scenario 4.
Okay, well, tell me what you understand of scenario 4.
So with respect to scenario 4, at least the second part of the question,
yes.
Would it make any difference if this person was age 60? To my mind, yes, it would make a difference. Couple of things. She would not be entitled to the age exemption, not yet having attained the age of 65, but certainly she would be able to benefit from the pension exemption and to apply that pension exemption to all sources of income since she has attained and surpassed age 65, age 55, I beg your pardon, and so on.
You are on the ball. Thank you very much. You are on the ball. You are correct.
Right. I was actually raising my hand before because I was also, but I don't want to jump the gun on the gentleman who's also waiting in line because he had a question in relation to a previous scenario where I wanted to ask a quick question about scenario 3. So I don't know if you'd want me to wait until after you've taken his question.
Let us take him, ladies, let me just take your question and then we go back to Lawrence. Lawrence, we haven't forgotten you.
All right. So I just a very quick question with respect to scenario 3. I think we seem to be dealing with specifically with the pension exemptions and not necessarily threshold. I recall you saying that the exemptions to which you would be entitled would be, of course, the overall exemption because the person is certified as being incapacitated, permanently incapacitated, the pension exemption and the age exemption. But I was thinking, would she also not be entitled, or was it a he? I don't remember. Would the person also not be entitled to the annual threshold?
Okay, if you notice, the scenario is talking about the exemption.
Oh, right, exactly. So I thought that's probably it.
Not an exemption.
I'm aware of that, yes.
Right.
But I was kind of like just curious.
Yes, and the response to your question is yes. The person would also be entitled to the threshold.
Okay, fine. That was it. Thank you so very much.
Yes, but because we're treating with the
exemptions, yeah, exactly.
That's where the scenario. But thanks for that observation, though. Okay. And I'm sure other persons probably would have had that in their minds, and they're saying, why we're only talking about the exemptions and not the threshold. But this person would indeed be entitled to the threshold as well. Okay,
thank you
so
very
we're now
much.
moving. You're most welcome. So we now go to Mr. Lawrence. Lawrence, please unmute. Mr. Lawrence, have you left us? Mr. Lawrence had a question, and I had asked him to just hold until we would have completed the Miss Taylor, go ahead. Miss Taylor? Tanisha? Ladies and gentlemen, we're asking that you look for the microphone, that little icon that looks like a microphone, and click on it. Geneva? Graceline? All right, go ahead. Unmute and speak, please. Geneva, I hear your mic is open. Miss Richards? Okay, so we're moving on to scenario 5, and we're still on pension exemption. Now, Lorna Lowe is employed to Health and Wellness Limited. She has attained the age of 65 years in March 2024. So 2 months ago, she attained the age of 65 years. And she started receiving her pension. She starts to receive her pension in September. We're not quite there yet. But in September of that same year, from an approved pension fund, is she entitled to the age or pension exemption in that year? She has just attained the age of 65, and she has just started receiving pension income far into the year. Is she entitled to any exemption? Tyrone, help me out, please. Tyrone, please go ahead and speak. All right, so let us, Marlene, we're taking if we don't get Marlene, then we're going to move along. Marlene? All right, so let us look at it together.
I'm here.
Okay, Marlene, go right ahead.
What is happening? The unmute thing just flickers in and out and then it disappears. Sorry about that.
I think that's a challenge. Okay.
Yes, the unmute thing is
They're
a
having
challenge.
a challenge.
I believe she is entitled to the age pension. she would be entitled to the age pension. Pension exemption, if she's just, I think I say yes. Because if
Yes.
she's going, yeah, I say yes, should get both.
She would get both.
Yes.
Okay.
And the entitlement amount would be the one, it will be her full age pension, because I believe you said that even if it's December 31st, they would still get their age pension, but the pension may be prorated. I don't know if I'm right.
Okay, all right. So thank you very much. You have, thanks for your participation. You are, for the most part, most of what you said would have been correct, except that we need to tighten up a few loose screws. All right?
Okay, please. Thank you.
So, yes. So in terms of, we refer to the reliefs as age exemption and pension exemption. So it's not age pension and pension. It is age exemption and pension exemption. And you are indeed correct to say that she is entitled to both because she is a pensioner. The fact that she has received pension in the year, she's a pensioner for year of assessment 2024. She has attained the age in 2024, and so the age of 65, and so she's also entitled to the age exemption. Now, for both, I would have explained that in respect of both exemptions, once you're entitled to them for the year, there is no prorating that is necessary. So once you receive pension income for 1 month in a year, you are entitled to the pension exemption, the full amount of the pension exemption in that year. And we see where this is just repeating what I had just said, that she would be entitled to both, but the pension exemption would not need to be prorated. So this has helped to reinforce that. All right, we're going to come to some computations. But before we do that, there are some things that we need to understand in terms of how the computation, how the different figures work, and how the statutory contributions work. So in order to prepare us for that, we have to do a little, homework before. So we want to look at the age limit for the payment of statutory contributions, because that will impact how how the tax is computed. So for NIS, and this has nothing to do with what the minister had said earlier, but this is just information that will be related to how things are computed, especially in the scenario that we're going to be using. Now, NIS, you pay NIS in Jamaica between the ages of 18 and 65. Both males and females now, since 2021, their retirement age for NIS is 65. Now, your deemed retirement age is 70 years. So should you continue to work or to have income beyond the age of 65, you will continue to pay NIS until you attain the deemed retirement age of 70 years. Okay, A request has come in, so I'm going to be stepping back a little. I'll come right back to the age ranges that we need to discuss. So I was asked for scenario 4, where Mary was 45 years of age, and then, you know, the other scenarios where she was 60 years of age. The response to that is now being screened. So the person who would have made that request, it is now being screened, and I will go forward shortly. So I trust by now you would have taken a pic or something. So I'm now going to move ahead. All right, so we're back at age ranges, age limit for the payment of statutory contributions. And ladies and gentlemen, you need to know this because, you know, you need to know what you are required to pay as opposed to what you're not required to pay, and why. So you need to be able, if somebody says that you're to pay X or Y, you need to be in a position to say whether you agree or you disagree, right? So the deemed retirement age now for NIS is 70 years. So you continue to pay NIS until you attain the age of 70 once you have what the NIS Act calls insurable income. Now, for some females, their retirement age was not 65 because there was a time when men, the retirement age, NIS retirement age for men was 65, has always been 65. But for women, it was 60 at a point. But between 2011 and 2021, there was a gradual increase in the ages of women, of the retirement age of women, to make it similar to that of men. And so you will find that for some females, their actual retirement age would be anything between 61 and 64 years of age. And so for them, their deemed retirement age would be, if it is 61, 61 plus 5. Or if it is 62, your deemed retirement age would be 62 plus 5. Right? So that is why we have that gradual increase to age 70. But nobody pays NIS or is required to pay NIS beyond the age of 70 years. Right? And you pay NIS until you cease to have the income or you attain the age of 70 years, whichever comes first. For NHT, you pay that between the ages of 18 and 65 years on income earned above the minimum wage. So once you have attained the age of 65, you stop paying NHT altogether. For education tax, in respect of employment income, you pay education tax between the ages of 18 and 65 years. In respect of your self-employment income, there is no ceiling. Once you're earning above minimum wage, you pay education tax. For PAYE or income tax, there is no age limit. If you are whatever age you are, as long as you are in receipt of income, you are required to pay income tax. No age limit. You could be 1 or 100. All right. So we would have covered the age ranges. Now we're going to be looking at the rates, and we'll be going through these fairly quickly. To the extent that you're required to pay NHT or NIS, these are the rates. So I'm not saying that you're required to pay them. Don't leave here understanding that I'm saying that you are to pay them. I'm saying based on some person's circumstance. For a person who would have attained the age of 65 but continues to be employed or continues to have income would certainly need to pay NIS. A person who, like I think one of the participants earlier spoke of her taking early retirement at 55, to the extent that she has income, of course, apart from the pension income, to the extent that she has other sources of income, she would still be required to contribute to NHT until she has attained the age of 65. So for that reason, I'm presenting the rates. So NHT, the rate of NHT is 2% for employee. In the case of employment, it's 2% for employee and 3% for employer. For NIS, it's 3% for employee and 3% for employer. Education tax is 2.25% for the employee and 3.5% for the employer. If you notice that on the basis for calculation, it says gross emoluments for NHT excluding pension income. You don't pay NHT on pension income. You don't pay NIS on pension income either. And you don't pay education tax. So those statutory income figures that we have there, or the gross income, would be less your pension income. So it therefore means that if your only source of income is from pension, you don't need to concern yourself with any of these rates because you would not be required to pay any of these, right? But like I said, there are some persons who's, based on their situation, they may need to pay some of this. For PAYE, currently in Jamaica, we have the individual pays income tax on a 3-tier. They have a 3-tiered rate structure where up to the threshold, and for this year, the threshold is $1,650,090. You pay tax at 0%. Remember, we have been saying that if you're earning below the threshold, you would not be required to pay any tax. If you earn above the threshold up to $6 million, you pay tax at 25% on that segment of your income. If you have statutory income in excess of $6 million, you pay 30% on every dollar in excess of the $6 million. And just presenting, so we looked at what it is in respect of the rates that would be applicable to employment. These are the rates now that would be applicable to self-employment. The self-employed person pays NHT at 3%. They pay NIS at 6% and education tax at 2.25%. If you notice that for the employed person, NHT and NIS would have been paid on gross, but for the self-employed person, all the statutories are paid on statutory income. So all the statutory deductions are to be based on the statutory income. And of course, the income tax rate structure is the same as it is across the board, whether you're employed or whether you're employed or self-employed. So here it is now. We're at this scenario where we will draw on some of the information that we would have just covered. Mr. John Jones is an architect who is employed to ABS Limited. In 2023, he was 67 years of age and had emoluments of $7.5 million. He also had pension income of $1.5 million from an approved superannuation fund. Now we're to calculate his income tax liability and net income for 2023, and then we do the same thing for 2024 on the basis that his income stream would not have changed. So I'm going to work through with you. So let us go to the computation. So he is 67 years of age, and he is in receipt of pension income of $1.5 million. He is 67 years of age, and he is in receipt of pension income. So we take it that he would be, by now, you'd all agree with me that he is entitled to both the age exemption and the pension exemption. His gross income would be the 7.5 million plus 1.5 million, which would make that $9 million. Remember now, we said that the deemed retirement age for in respect of NIS is 70 years. Now, Mr. Jones is only 67 years of age, and therefore Mr. Jones would continue to pay NIS, right? So when we go to the computation here now, we see that in addition, so we take his gross income, which would be his total, you subtract the pension exemption of $80,000 because we are in the past, right? We're computing it for the past. This is what would have obtained in 2023. He would have been entitled to age exemption and pension exemption of $80,000 each. He would also have been entitled to the NIS, which would be 3% of $5 million, because that's the ceiling on which you pay NIS. Nobody in Jamaica pays NIS on more than $5 million. So given that his gross is 9 million, that would be restricted to 5 in computing his NIS. So remember this morning earlier, we said that your statutory income is your gross less all allowable exemptions and deductions. Right? And so here we have his total income. You're subtracting the exemptions and the deductions, right? So let us say this morning, somebody asked if it is that they were in receipt of $100,000 per month for pension income. In that person's scenario, the person would be the gross income, and if that is the only source of income, to the extent that that would be the only source of income, then based on what we're looking at here, the person would have gross income of 1.2 million. You would, when you deduct the age and the person might not have been required to pay NIS. That's going to be dependent on the person's situation. But say the person is required, if the pension income is the only source, then that person would not be required to pay NIS, right? Because remember, we said that you don't pay the statutories on pension income. So in that scenario, this person would have gross income of 1.2 million. If you were to take away the exemptions from the 1.2 million, you would end up with 1.2 million less 160,000, would be 1,040,000. So this person's statutory income would be $1,040,000. It just means the person wouldn't pay any tax, but it would not mean that the 1.2 million is going to be increased. So the point I'm making is that the exemptions are used to reduce the amount of your income that you pay tax on. It does not increase your income, your pension income, because it is not the pension income that the minister would have announced an increase in. It is the exemptions that are taken in order to compute the tax. And I trust that that is made a little clearer. So this person now, Mr. Jones, has gross income of $9 million, or had gross income of $9 million. He was able to take his age and his pension. He was also required to pay NIS because he had other sources of income apart from the pension. So his statutory income was $8,690,000. And that is his gross less all allowable exemptions and deductions. The threshold for 2023 was $1,500,096. So he would be able, of the 8,690,000, he would be able to get as a deduction the threshold which prevailed for 2023 of $1,500,096. Remember, we said that the income that is above the threshold up to $6 million is subject to tax at 25%. Your statutory income above the threshold up to $6 million is subject to tax at 25%. So what you would do for Mr. Jones here now is to subtract the threshold from the $6 million, and the difference would be $4,499,904. That is subject to tax at 25%. We also said that income in excess of $6 million is subject to tax at 30%. So when you subtract 6 million from the statutory income, the total statutory income, you have 2,690,000. That is subject to tax at 30%. So we see here where Mr. Jones would have been required to pay a total income tax of $1,931,976 for 2023. We're now going to, and the NIS deduction, when we combine those, when we add those, we get a total deduction of $2,081,967. Now, when you subtract this total deduction from the 9 million, Mr. Jones's disposable income would be $6,918,024. What we're going to now be doing is look at how the exemption, the increase in the exemption and the threshold would impact his tax payable and by extension, his net disposable income. So in 2024, his income has remained the same, $9 million. But if you notice, back in 2023, he got as a deduction, the exemptions were $80,000 and $80,000, $80,000 for pension and $80,000 for age exemption. Come 2024, those amounts have been increased to $207,530 each. $207,530 each. And of course, because if he was 67 years of age in 2023, then he's going to be 68 years of age in 2024. So he will continue to pay NIS for that year. So what you have seen here now is that look at his statutory income for 2024 is $8,434,940, as opposed to what it was in 2023, it was $8,690,000. So we see that the increase in the exemptions has resulted in a reduction in his statutory income. And we'll talk some more about how that impacts his income tax payable. And I must add that based on his age, if he's 67, he would not be required to pay NHT or education tax. So that is why those are not taken into consideration in these computations. So in addition to the age and pension exemptions increasing in 2024, we have seen that his threshold, which was $1.5 million in 2023, has now been increased in 2024 to $1,650,090. So he pays no tax on that amount. The statutory income above the threshold up to 6 million is subject to tax at 25%. So we see here where when you subtract this increased threshold figure from the $6 million, he is now paying tax at 25% on a smaller figure as well, right? The statutory income subject to tax at 30% is now a smaller figure as well, because the statutory income would have been reduced for 2024 as a result of the increased pension and age exemptions. So he's now going to be paying tax at 30% on $2,434,940. So his total income tax payable is $1,817,959. When you add that to his NIS, his total deduction is $1,967,955.50. So Mr. Jones is going home with and in 2024, Mr. Jones will go home with more of his income in his pocket. So when we break down the impact, what we're seeing is that the statutory income in 2023 was $8,690,000, as opposed to 2024, when, as a result of the increase in the pension and age exemptions, his statutory income has now been reduced to $8,434,940. So that the exemption has resulted in a reduction in his statutory income. The increase in the income tax threshold has resulted in a reduction in the portion of his income that is subject to tax at 25%. Because in 2023, his income subject to tax, his statutory income subject to tax at 25% was 4,499,904, as opposed to a reduced amount of 4,349,910. So he's paying less income tax as a result of the increase in the threshold, as well as the increase in the exemptions. Right? So by virtue of him having a smaller statutory income and the fact that income tax is paid at 30% on the difference on the income in excess, the statutory income in excess of $6 million, then you find that he's going to be paying tax at 30% on a smaller figure. He's also going to be paying tax at 25% on a smaller figure. And in terms of the actual impact on his income is that he, rather than paying, as opposed to him having paid income tax of $1,931,976, in 2023, his income tax liability would have been reduced to $1,817,959.5. So he's saving, his total savings in income tax would be $114,016.50. Now, the thing here, ladies and gentlemen, this will vary from situation to situation, because Mr. Jones here is able to utilize the increased exemption and the increased exemptions, both of them, as well as the increased threshold. So he gets the full benefit. But to the extent that a person does not have the level of income to utilize them, then they would not necessarily benefit in this way. So it is, the bottom line is, I hope we have made it a little clearer that the exemption is not intended to increase your pension income. What it does is it increases the exemption. It is the exemption that would have been increased. And where the exemption has been increased, to the extent that you have enough income to utilize them against, it means that you will pay less tax. But if you weren't required to pay tax in the first place because of the level of your income, the exemptions now will not accrue, it will not result in an increase in your take-home pay, in your exemption. I hope I have made that clear. And I'm going to be taking some questions now. We'll take a couple questions and then okay, so I have been asked as well to screen the response to scenario 2, and I'm going to do that before we take the questions. So scenario 2, the response is being screened. Oh, so what was scenario 2, just for the benefit of everybody? Scenario 2 was where John Mark is 50 years of age. He was certified to be permanently incapacitated, or he is certified to be permanently incapacitated. And for the year of assessment 2024, he is in receipt of the interest income of $15 million plus income from other sources, not including emoluments. And the question was, does he qualify for any exemption? And you were to justify. Now the justification is now being screened. And I take it that we have captured the details that we need to capture here. So we're going to be moving into our final question and answer session. Vanessa, go ahead. Vanessa? All right, is it that we don't have any questions? Or they have all been answered in the Q&A?
That was an error.
Oh, that was an error, Vanessa.
Yes. Yeah.
Okay. All right. Any other anybody else has a question? Grace Martin, go ahead. Grace Smart.
Good afternoon.
Good afternoon, Ms. Smart.
I really don't have an question because the computer continued to go on raise hand, lower hand. So that's why when you're talking, then that's how. But the presentation is timely and it's really good, 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 good.
Thank you very much. Happy to have been of service to you. Legit, go ahead.
Yes.
Yes.
I benefited from the presentation. I'm just still a little unclear on some things, but
Yes.
well, first of all, when a pensioner gets their pension, when they see it physically or they get, the pension provider, is it that what they give them is after taking out tax, and what they get is a net amount? That's the first thing before I follow it up.
Okay. All right. Well, that is a matter that would be best answered by your pension fund manager. To the extent that you're earning at a level where you're required to pay tax, the pension fund manager is obligated to withhold tax and pay it over to TAJ.
Oh, so
But, yes.
So
Go
it's
ahead.
not they take out the withhold the tax. So if they have say 500,000 or whatever it is, 1.2 million using your figure.
Yes.
That they say is a gross amount due to you. When they're computing the actual amount that they're going to be giving you, is it that they deduct tax and then they give you the difference?
So if you're earning 1.2 million, you should get that gross.
They give you the gross.
Yes,
So
it is. It ought to be gross.
So they don't take the tax into consideration.
No, because you're not earning at a level to pay tax.
And hence what you're saying is that unless you have some other form of income, even
That's correct.
the government has announced, is not beneficial in a sense to that pensioner who is getting that 1.2 and don't have anything else.
Right. So
That don't make no sense then.
That Well, I would not say it does not make any sense.
No
I'm sure there are
benefit
some persons
unless
who
you are rich
benefit.
or you have some, unless you seem to have some, you're fortunate to have some other kind of big income or so. For the general pensioner, it is of no benefit to them.
That definition of general would probably be needed, but what I would say is to the extent that your pension, if your pension income is the only source of income that you have, and it is below the level where you're required to pay tax, then the exemptions, the increase in the exemptions would not accrue a benefit to you. Because it does not in any way impact the amount of the gross amount of your pension income. Angela, go ahead.
Good afternoon. Very informative presentation. We need things like these at least once a year. My eyes, ears, and mouth are open right now.
I am happy it was beneficial to you.
I have a couple of questions.
Yes.
I got injured on the job, was incapacitated, permanently disabled, was getting, after 7 years of fighting, I started to get a disability allowance. During that period, I lost my husband, who was a pensioner, who was on the job too, accident, died. Now fighting for 4 years, they told me I cannot get 2 pension. I can either get the widow's pension or the invalidity pension. Can you explain that to me?
Okay, that is really going into the rules governing the pension fund, though, which I would need to inform myself of. That it has to do with the rules. So the pension fund managers, I guess you could have a discussion with them on that. Because it would have to be the rules of the pension funds that would, stipulate that you are not entitled to both.
But yet still there are other persons whose husband died and they getting 2 pension from NIS.
Okay.
You
So
can't see through it. I tried and it's just not getting anywhere.
But what happens though is, what I can say to you, and I might not necessarily have the exact response that you're looking for, is that we tend to say, because somebody else is getting a particular treatment for tax purposes or any other purpose, does not necessarily mean that you are entitled to that same treatment. It depends on the circumstances. And unless you know that the full details of the other person's circumstance to be the exact thing as yours, then sometimes, we might be misguided in thinking that because somebody else is getting a particular treatment, then we are entitled to. And I'm not saying that you shouldn't get it, because I would have to, go through the rules in order to be able to say whether or not it should be so, right? So it's not that I'm saying, but because somebody else gets it does not mean that it is automatic for everybody to be treated that way. That's the point I'm making. Okay. But I hope and pray that your situation will be resolved. And if you do have any tax related issues, please feel free to reach out to us. We will certainly do our best to assist you.
I do have another question.
Sure.
Anyhow, I had to stop working I sent in my retirement on the grounds of ill health 6 months before I went off. I had to wait 2.5 years for it to process, and I am waiting 5.5 years now, still have not gotten my pension. My question is, what about my statutory deduction that when it reaches 6 years, am I going to lose it? And it's not my fault?
Okay, so you're talking about the statute of limitation and your, okay, at what point were you certified to be incapacitated?
It was almost 2 years after I am on continuous sick leave. I sustained spinal injury on the job. And because of the previous accident with my husband, I had to really hold on to take my children to school, college. When I couldn't bear it no more, I had to really go home. And waiting, no other source of income, just spending. And it's a roller coaster ride. Not reaching anywhere.
I really do empathize. And the thing though, in respect of the question you asked, to the extent that your certification, you will be able, the statute of limitation will be applied, but to the extent that you were certified prior to, say, 6 years ago, we are now in 2024. 6 years ago would have been
2002.
2018. So whatever exemptions would have been available to you for 2018 up to now, you certainly will be able to benefit from those.
Okay, I was wondering if I am losing. Still not finished calculating, and it is really nerve-wracking till it even have me now in another mode of just trying to hold on to my faith. It's not easy, not easy. Living alone and no source of income except the little invalidity allowance I'm getting.
Okay, I can't say, I won't say to you I fully understand the gravity, but I have an idea, and you know, it sounds painful. We do empathize. And I know there might be other persons listening who are in similar situations. We have heard the cries of persons waiting for years to get their pension income. That's not something that TAJ really has any input in. So in terms of the speeding up, I don't know. And you have been having dialogue with your pension.
Yes, back and forth, Western Region, Ministry of Health, Ministry of Finance. And because of my injury, I cannot travel that often. And dialoguing on the phone, it don't make no sense. You're not getting, you
Have
hear
you
this.
reached out to Abilities Foundation to see if there is any assistance that they can provide?
I tried, no. I tried twice. At first, they were saying I was not qualified because I was working still, even though I was getting the disability allowance. But when I stopped working now, they say whenever I process the NIS, when they approve of my pension, then I can apply. But now I am going to go in. I have not received anything yet, but I am going in to the person next week to see what can be done.
Yes. I trust that the matter will be resolved there, or you'll make some headway at least, you know, because it cannot be easy based on what you would have explained. All right, so
thank you very much. Thank
and
you.
thank you for coming and sharing, because what you would have shared might be the situation of other persons, and those things though they're not really matters for TAJ, and so I listen and I empathize. I really don't have
And
the answer.
my husband was working at tax office. I don't know if you know Manley Campbell. That Manley Campbell that ended up in ICU at University Hospital. It was trauma.
Which of the offices he was?
Savlamar. $10.6 million still owing to University Hospital for his care.
Wow. Mm.
And I have 2 children, plus he had one before that I had to send through school, college. It was a rough path and still going rough, but thank God for his mercy and his grace.
That's right. That's right. Continue to lean on him. Yes. Thank you very much, though. We have heard the cry.
Okay, bye-bye.
Yes, take care. Any more? We'll take about 2 more questions. Fitz, go ahead.
Good afternoon to you all. Are you hearing me?
Yes, Mr. Gentles, loud and
Yes.
clear.
Okay, my concern is that I'm almost certain I heard you mention that NIS, if you're gainfully employed, would go up
Yes.
to 70 years, but
That's
NIA,
correct.
but NHT and education tax should cease at 65. Is that correct?
For NHT, let us break them up a little bit. For NHT, you cease at 65 regardless of your source of income, right? So whether you are employed or self-employed, you cease paying NHT at age 65. In respect of education tax, you pay education tax up to age 65 on your employment income. But in respect of your self-employment income, there is no upper limit.
Okay. And also there's no limit on income tax, PAYE.
There is no age
I
limit
know.
as it relates to income tax.
Would this information be in the technical report that you have on your webpage?
Okay, what we're going to do, we're going to be uploading most of it is there. But the slides, the presentation here will be uploaded to our website. So you'll be able to find that information in the presentation here.
Okay, thank you very much. And thanks for this highlighting of these very important information. It was well put together.
Thank you very much for your kind comments, sir, and we're happy to have been of service to you.
You're welcome.
Miss Hall? Miss Vinette?
Hello.
Yes, Miss.
Hi.
Yes.
Finally. Oh my gosh. I mean,
Oh.
like about 2 hours ago.
Oh man, I'm happy you have gotten through though.
Yes, but I think hello to everybody. I think some of my questions most of them were answered, especially through the workings. I'll go through the workings again because I do file SO4. I'm a pensioner, and it kind of opened my eyes much more on the reason why certain things are being done. So I really thank you for this. I never thought it would be so long, but I don't even eat that yet because I don't want to move from here.
Wow.
Yes, so I am most grateful. And when are we going to have more of this? We want more.
You want more?
Yes, we want more. But one of the things that I realized in the discussion that some of us may think income, when they say we are not, the increase in the threshold was not meant to be the increase in your income. I mean, you're talking about gross income, but as one lady had said, they really want to know if you're going home with some more money in your pocket. And I think that's what people want to know. Money in your pocket, not that increase in pension, but money in your pocket as a result of less tax being or something like that.
Right. So basically the scenario that we had used with Mr. Jones, you see that Mr. Jones, to the extent that Mr. Jones was earning at a level to be able to utilize the full amount of the increase or the increase in the threshold and the pension exemption, Mr. Jones is going home with $114,000 for $114,016.50 than he would have gone home with in 2023.
Quite so.
But the bottom line is you need to be earning at the level. To,
yes. And a quick question, since I managed to get through to you at the end. The 20, 30, 10, whatever you get from the NIS, is that net or gross? Because you don't get, just like how you get a P45 if you're getting a retirement from a retirement scheme, you don't get anything from NIS. What you get from NIS?
You don't get an annual statement?
Not a thing, nada nunca, no. Not a thing, no, not.
Oh, there's a discussion you could have with them though.
Yes, but if I am not the only one in the world, and
yes, so you.
Yes,
I understand. No, but you can make a difference to the world.
I'm trying
and that's
to.
why
I'm
all
telling
of us,
you.
Yes, you can make a difference in the lives of all the other NIS pensioners.
Yes.
Right, but you did say though that the monthly amount is 20,000 and something.
No, some people get 20, some get 33. I don't know anybody get 50, but you know, I don't know anybody getting any more.
That level, whatever you get would be gross.
Would be gross.
Yes, it would be gross because you would not be required to pay tax on the pension income at that level.
Oh, so is that part of your SO4?
Yes, so you are required now to include that to the extent that you have income from other sources and you're required to file the S04, then you would include your income from all sources.
Okay.
Because you, with the pension, when you are contributing to the pension, to the NIS fund during before you start to get the pension, that contribution is tax-free. So it is taken out of your pay before you compute tax on your pay. At the point when you start to get the pension income, the pension income is taxable, it's subject to tax. It is brought into charge under Section 5 of the Income Tax Act.
Okay. Good to know that. All right. Sounds good to pay tax, but sounds good. More knowledge.
Oh, I understand. I would tell you a little secret, but you'll probably say it otherwise. Yes.
Good. We need more of you. We need more of your presentation. You.
Okay. Well, we'll arrange some more and we will keep your ears to the ground.
Okay. Wonderful. Thank you so much. Thanks
you
a lot.
are most welcome.
You and your team, because I'm sure
my
it's a team.
I have a team, a very dedicated team here, you know.
Yes.
Yes.
Thanks a lot.
You are most welcome.
Bye-bye. Thank you.
Okay. Do we have any more? All right. So my team here is saying that I am to take 5 more. Oh my. All right, Noreen, you go ahead. Norleen. Or we can take them. Yes, we'll take as many as we possibly can, but I'm mindful of the fact that the participants are tired and I don't want to weary you. So to the extent that you want to stay on and ask the questions, we will take them. Well, within reason. But let us go. But I'm going to ask you to go quickly with the questions though, because we want to get as many as possible in.
Okay, so Norlene is on.
Yes, go ahead, Norlene.
Okay, I must say firstly, a very, very good presentation. And I like the package, right? So you said that we'll be able to have access to it. Unfortunately, I came in after it started, so I was not able to participate in the answering. Also, the chat was disabled, and there were some more glitches with the hands thing, right? Anyhow,
Okay.
what I need to know, you mentioned something about the oh my God. Say when we're filing for income tax.
Yes.
Right, that aspect. But if say I earn my additional earnings, say from dividends, dividend
Yes.
payments, and the tax is already taken, do I still need to indicate that the income from that?
Yes. As a resident in Jamaica, you're required to declare your income from all sources. Now,
Yes.
whoever would have paid you the dividend would have paid you net of tax. So say it's ordinary dividends. You would
Yes.
have, and say it was ordinary dividends of $100. You
Yes.
would have been paid $85 and given a withholding tax certificate for $15.
Yes.
Now, when you're filing your income tax return, you would include your dividends of $100. And then
Right.
when you get to the tax computation section of the form, then you take a credit for the tax that was withheld at source so as to prevent you from being taxed twice.
Okay, okay. Thank you.
You are most welcome.
Yes, thank you. A very good presentation.
Thank you very much.
You're welcome.
Yes. Marlene, go ahead.
Thank you very much. A wonderful presentation. Thank you so very much. I learned a lot. Could you just repeat how to apply for somebody who is disabled?
Yes.
How do they go about applying for the tax exempt certificate?
Okay, so you would start with the Abilities Foundation. When we actually did the attempted to get an outline of the procedure, we were directed to the Abilities Foundation. And so I don't have a step-by-step procedure, but if you make contact with the Abilities Foundation at Ripon Road, they should be able to provide you with that information.
Okay, okay.
Yes.
And just to reiterate that I don't have to come in as a pensioner. I don't reach 65 yet. As a pensioner, I don't have to come into the tax office to apply for the additional amount. That should be automatically done by my pension company.
That is so. To the extent that you don't, if it is that you want it to be used at another institution or to be split, then you certainly need to come in to apply. But if it is that you just want to utilize it against your pension income, then they are authorized to just apply the increased amount.
Thank you so very much. Have a good day
You
to
are
you and your
most
team.
welcome. Thanks. You
God
too.
bless.
Bless you too. Violet, go ahead.
Hi. Hello. Can you hear me?
Yes.
My question is I was told that you have to submit a Pure One form if you get NIS. I mean, there's no other income other than NIS, but they said they would not apply the new amounts and the new amounts until I submit the Pure One form because I earn NIS.
All right. So you're going to tell me who told you that?
The company that administers the pension plan, the pension.
Oh, so you are in receipt of pension from two different organizations, from NIS as well as
One of I'm receiving pension from the company I used to work for, but I also get NIS.
but you also get NIS.
Yeah.
And so they are not sure whether any of the exemption is being applied against your NIS.
They will not apply the exemption unless I put in a Pure One form because I earn NIS.
Okay. Well, having considered that situation,
I mean, no other
TJ,
earning
you have no other earning.
other than NIS.
All right. It seemed to me that what you would need to do, though, is to just indicate to them that you're not utilizing, provide proof to them that you're not utilizing it at NIS.
Sorry, say that again.
I said it seemed that you would need to provide proof that you're not utilizing the exemption at NIS.
Oh.
All right. So in terms of our position, because we do not expect everybody to be coming in for an so you're saying it was never ever applied by your pension fund manager. So it's not like you it's just, were they applying the lower rate?
The existing rate, yes, but they're saying in order to get the new rate, I have to get to a Pure One or something because I earn NIS.
No, but for the same reason, weren't you earning NIS before the increase?
Yes, but I think they said you had to put in a Pure One form even then. I mean, the last.
Okay, but the response from, so TJ's position is, once you were using the full exemption,
yes,
against your pension income, your pension fund manager may go ahead and apply the increased rate without you making an application.
Well, they have said, no, you have to put in a Pure One.
All right, so that seemed to be something that, and I don't want you to tell me in this forum, but that's something that you could reach out to us so we will know how to come in. We want to communicate with our pension fund because this is new to them, right? And we have to understand that they want to be sure of what they're doing. So I am sure that what has been said is not to disenfranchise you in any way, but to ensure that they are within the rules and regulation. So what we would need to do, what we're going to have to do, is to reach out to our pension fund managers and have dialogue with them.
Okay. Is there any way I could speak to you after this? I mean, to just get further clarification.
Okay. All right. You can send me an email.
Yes.
And I am hoping my email. Okay,
Right.
I'll be able to respond. But it's Colleen.Williams@TAJ.
So that's again.
COLLEEN.
COL, one L?
Two L's and two E's beside each other.
No, just wait. Let me turn this thing off now. Oh, COL, two L, COLLEEN.
Yes.
Yes.
Williams.
Williams.
At TAJ.
At TAJ.
Yes, .gov.jm. .gov.gov.
.gov.jm.
.jm.
Okay, so I'll send you an email to explain.
I will, and I will respond.
Oh, it says
But
Colleen.
just bear in mind, though, that I've given out that email address, so I am expecting a flood. But I
million
will
people.
respond to them as quickly as I can.
Okay, Colleen.williams@taj.gov.jm.
Taj.gov.jm.
At taj.gov.jm.
That is correct.
Okay, I'll send you an email and explain in a little more detail.
I would appreciate that.
Thank you so much.
Okay. Thank you.
And
Next
your
question.
presentation was very good.
I am happy you found it beneficial.
It was.
Okay. Andrea, you go ahead. It's your turn. Andrea, you don't want to talk to me?
Good afternoon. Good afternoon.
Well, good afternoon. I'm hearing you now, Andrea.
Thanks for the presentation. I have a question about the S04 form.
Yes.
At the end of the form for 2023, it indicated that I had a refundable sum. How do I get that money back?
You have a refundable income tax?
Yes.
All right. So it goes, that return would be sent to the refunds unit and they would do the necessary processing. So you would have filed your return online. That one should automatically be a case for the refund or refunds unit who will do the necessary checks and balances. And then of course, you will be called in because then you're going to have to provide things like your bank account, your account number, because as far as I know, the refunds are sent to your account.
But how long does that process take?
Okay, it depends on the number that they have dealing with. I cannot give you a definitive answer to the time at this moment, because it depends on the what is in the pool at the time.
Okay, thank you.
You may make reach out to, depending on where you are. Which parish are you in?
I'm in St. Andrew.
St. Andrew. Well, you can reach out to the Constant Spring office and make inquiries about it. So if you're not hearing anything, you can make initiate the process. You can reach out to them and you'll be able to get a more direct answer in terms of time than I would be able to give you at this point.
Okay, thank you.
You are most welcome. Joshua, go ahead.
Yes, ma'am. I sat here and I listened. And at the beginning, you stated that once a teacher, always a teacher.
Yes, sir.
To use that phrase to commend your presentation. You have made it so clear.
Wow.
Thank you very much.
You are most welcome, sir.
And you said, I heard just now that the slides for this presentation will be on the website, the TAJ website.
Yes, sir.
Oh, thank you very much. I want to watch this again. It is.
Yes.
Thank you.
And it is being streamed on YouTube as well. So you can always go to YouTube to find the video.
Even better.
Yes.
Thank you. Thank you very much. God bless you.
Bless you too.
All right.
Delcita, go ahead. Delcito?
Constance.
Go ahead, Miss Constance. Miss Harris?
Thank you. And I also, I concur with the comments that have been made before. Very good.
Okay.
presentation. Thank you. Are you hearing me?
Yes, I'm hearing you. Go ahead.
Okay. No, just one thing I want to clarify. If you would, will you just give me what the threshold is for the government's income tax for 2024?
It is $1,650,090.
$90.
1650090.
Okay. So what is earned or what is received in income, whether it's pension or other sources per month, would be calculated by 12 to get to the annual part.
Right. So if you're in receipt of $100,000 for pension income, you multiply that by 12 to get your gross for the year. So if you're in receipt of 200,000, then it would be $2.4 million.
Yeah, talking about per month?
Per month. No, if you're in receipt of $200,000 per month, your annual would be 2.4 million.
Okay. In this case, I'm talking about the NIS pension.
What was the question about the NIS pension?
No, I'm saying you would calculate it. There's an exemption on the NIS pension.
Once you're in receipt of pension, you are entitled to the pension exemption.
Right. And that is above 70 and well.
No. So if you have two exemptions, we would have explained two exemptions, and they're separate. One is called an age exemption.
Right.
And the other is called a pension exemption.
Right.
The age exemption you get at the point of you attaining the age of 65 and beyond.
Right.
So if you are 65 years of age, if you attain the age of 65 years in 2024, then you will be entitled to the age exemption.
Right.
The pension exemption now, once you are in receipt of pension income, you're also entitled to that other exemption, which is the same amount. So the age exemption for 2024 is $207,530. $207,530.
And that's for the year?
That's for the year. And it is the same amount for the pension. So with the age and the pension are the same amount.
Okay. Okay, so I think I'm okay now.
Okay. You are most welcome. No, that is fine. This is what I do every day, and I enjoy it.
Okay.
Yes. So, yes, you have a good afternoon now.
You too. Thank you.
Yes. Maurice, go ahead.
Oops, okay, still hearing me?
Yes, I'm hearing you, Maurice.
A hypothetical situation. Let's assume that you have gotten to the age of 65, you have retired, and your pension is given to you in a lump sum.
Yes.
what are the liabilities in relation to tax where you put down your lump sum and of course pay yourself over the time of your years left? One. Two, where you hustle around, take your risk, invest it or some of it. Some of the investments earn some interest. What are your tax liabilities? Then that's too wide.
Okay. So you take a lump sum on the rather than waiting to collect the pension over the number of years, you would take a lump sum up front.
That's how it's done, yes.
That's how it's done.
Yes, no choice.
All right. So and you're saying that you use that money to invest.
Two scenarios. One situation, you just put it down somewhere. It earns nothing. You repay yourself, or you pay yourself, I suppose, over whether by the month or as you need.
When you say you pay yourself, what do you mean?
Well, you have to go on living. You have your bills to continue to meet.
Right. So you're saying you use some of the commuted pension to meet your daily affairs. That's what you're saying when you say you pay yourself.
Yes. No, it's
or you have another source of income.
No, let's assume no other source of income. That's all that is left. It's in one situation. In the other situation, you take your risk, you invest somewhere, and from that amount, you may earn some interest. So it's a little different.
Right. So the interest income is a separate income. So the source of the money that is used to invest, to earn the interest income, is really of no moment. It is the fact that you're earning interest income to the extent that you're earning from an instrument that would be subject to tax, then you would be required to pay the tax on it. So if you invest in like a long-term instrument that is for more than 5 years and that interest income is exempt under the Income Tax Act, then you would not be required to pay the income tax on it. But to the extent that is not the case, you don't invest in an instrument that would be for which there is exemption, then you would be required to pay the tax on that.
Sorry, and where you don't invest any of your pension, you just keep it in some institution and you withdraw from time to time, as you would if you're receiving a salary. You're still working, right?
Yes.
What is the liability in that case?
No, there is no tax liability when you use it over time to
yes.
Right. There is no tax associated with you.
All right. Thank you. May I conclude with a suggestion then?
Yes, go ahead.
Given Jamaica's economic situation, and given that it's always asking its people to invest locally, wouldn't it be fairer to encourage a situation where a person takes his or her risk? Because it is a risk. And as we read from time to time, some people lose all or some people lose a lot. So you take the risk, not the government taking the risk, and you invest. Wouldn't it be more encouraging to have some alleviation in that respect? So I'll leave that and I'll listen for your response to that. And thank you very much.
Okay, so you're saying if they take the, don't leave me yet, don't
All
leave
right.
me, don't leave me.
Yes.
You're saying shouldn't there be some kind of an incentive?
Yes, to invest in
Yes,
your country. Uh-huh.
yes,
You put your pension, which could come back to haunt you, because if you lose it and you're getting older, you're above 65. I should have said that, right?
yes.
65 and above. Who's going to take care of you? But you take the risk
Okay.
in it. Nobody else, not the government, right? But in a
Oh.
desire in part to help yourself, in a desire in part to help your country, you invest in something.
Right.
You run
You're
the risk.
saying that something that you invest in should be tax-free.
There should be some consideration given to that.
Okay, but that's a policy decision though, sir.
Yes, I realize
That's a policy decision,
but maybe they
and
need to think about it.
I would not knock it, but I am not in a position to speak to that.
Oh,
That's
yes.
probably
Oh, yes.
something that you would want to, you know, take up with.
Well, maybe the mathematicians and actuaries and so can work it out, but
yes.
If they want more Jamaicans to invest in Jamaica at that stage of life, they need the encouragement.
They need encouragement. There are incentives though, and I can tell you that I am looking at my VEST team, and there are incentives, right? It might not be one that is specific to the situation that you're speaking to, but there are incentives out there for investors. And another day, in another time and place, we could have a session where we speak to incentives, available incentives.
Just to emphasize the hardship, think about it. You have retired now. You don't know how much longer, how much more time you have. Usually not much more. But you're trying to, there's nothing more to come. And you're agonizing, should I invest in SB2 or TOB or some other thing? There's nobody agonizing with you. You alone take that risk. Sometimes it may turn out to be not bad, but other times maybe there's nothing for you to get when you go one day. You see what I mean? Okay. The banks, well, no, I can say the banks are not particularly helpful these days. So something needs to be done.
Okay. I understand. I hear your cry. I hear the plea, but it would have to be addressed from a policy perspective.
Oh, yes.
Yes. But it is a valid point.
Thank you. All the best.
Okay, then you have a good afternoon.
Thank you.
Okay, then. All right. So, Cecil Gray, Mr. Gray, in another. Okay, so. All right. So, yes, let's go ahead with the questions quickly. We're going to have to cut off at a point though, because I know you must be tired by now. And I don't want to weary you. So when we call for another webinar, you say, no, I'm not going because it took too long the last time. I don't want that to happen. Right. So Judith, go ahead. Cecil, sorry, Cecil. Cecil? Badalu? Mr. Badalu, or?
Can you hear me?
Oh, sorry. Yes, Miss Badalu.
Sorry. I just needed, well, very good presentation, very useful. I just wanted to clarify, because I'm not sure if I got it right. If a file was done in March 2024, the SO4 file, did you say that that can be amended using the new tax threshold Or did I get it wrong?
No, you didn't get it wrong. The S04, so the S04 that would have been filed in March would have been for 2023. And so the threshold for that would have been $1.5 million. It is the estimate, because in March, you file an estimated declaration for the current year, and you file the final return for the previous year.
Okay.
So you would not need to amend the S04 because that would be for 2023. And back then the threshold was $1.5 million. But your estimate for 2024, you would have also used the $1.5 million, $1,500,096 in computing your estimate for the year. So it is that I'm saying you may go ahead and amend to reflect the current threshold for 2024 of $1,650,090.
On the SO4A.
On the A. Yes.
On the A. Thanks very much. Thank you.
You are most welcome. Eileen, go ahead. Eileen?
Yeah, can you hear me now?
Yes, I can.
Sorry, I am working and I've tried to stay on as much as I could, but just help me out here quickly. I'm just going to use rounded figures, right? So if I get a pension income of gross and the 100,000 for the year, and let's say I also get NIS of 20,000 for the year, okay? You talk about the threshold, and I'm going to have to read all of these stuff again. You talk about the threshold, and you talk about the statutory amount. So for the year, my gross is 120,000. Put that in relation to the threshold for me. So I am going to be paying taxes, correct? So whatever percentage applies to me, that 120,000 is going to be taxed.
Is it 120,000 per month or per year?
All right, let's say per month. That's probably better. Let's use per month.
If it is per month, 120 times 12.
Times 12.
$440,000.
120 times 12 wouldn't be 440. Let's see. If it's 120,000 times 12, 120 times 12, that would be 1,440,000. Right.
Right. And I'm saying at that level, because it is below the threshold of 1,650,090, then you would not be required to pay any tax. And so the increase, because when the increase would not benefit you at all.
Okay, so one second.
The pension or the threshold, because you are already below the original threshold figure.
Okay, so the threshold is 1,650,090, but because I am earning gross below that, you're saying I should not be paying taxes on any of that 144?
Right, that is correct. To the extent that that's your only source of income, you're not required to pay any income tax.
So if I
have other sources of income, then you would add that to those other sources to arrive at your statutory income.
So if I were charged taxes on all of that, then you're saying I could go back 6 years to claim? So if I were being charged, if taxes was taken from that amount,
okay.
So you're saying I'm below the threshold, so I should not be paying taxes. But if the company was taking taxes from me, so I could claim a refund back up to 6 years?
Okay, so remember now that the threshold figure changes from time to time. So since 2016, the threshold has been 1,500,000. I think July 2016, the threshold amount has been $1,500,096. right? So from 2016 to now, you really should not have been paying tax on that.
Okay. If
Prior
I
to
were,
that, I think it was 700 and something, but then that would be statute barred at this point.
But even so, if the case is where I should not have been, but the company did take taxes, I can only claim back with you guys up to 6 years. Is that what I heard? Statute bar.
Yes, at this point, based on the information available, I would have to say yes. Because the statute of limitation is going to be observed in processing the refund.
Okay. Because from what I hear from a lot of people, it sounds as though, and I think this is the case, where even though sorry, decline.
FaceTime video.
Even
Okay. Can we take Grace in the meantime? Mr. Gentles, you go, sir. Mr. Gentles, unmute your mic. Yes.
Yes, I just got you. Yes. Another question I missed out on the first time when I questioned. The question I have now is this: there's a situation whereby someone has a teen age of 65 years and still gainfully employed, and the 80,000 exemption was not being applied to their in terms of a calculation of their taxes. Can it be retroactively applied?
Okay, so repeat. I missed out some of what. There was a break there.
Oh, okay. Sorry about that. Yes. I'm saying if someone has been working attained the age of 65 years, continue to work after 65, and the limit of $80,000 was not applied to their computation for a few years, can it be retroactively applied?
You would be required to file the return to make that claim. Because when you say the person was working, I take that to mean employment. I take it to mean that the person is in employment. So I would not, well, you would not be going back to the employer to apply it retroactively. What you would be required to do is to file your return. Right. To file your return, declaring your income from all sources and taking the exemption that is available to you. Again, that is up to the statute of limitation.
And that is 6 years.
6 years back.
Okay, then. Thank you so much.
Yes. Paulette, after Paulette, we take 2 more and then we're going to have to close off. Paulette? All right, so Anne-Marie, go ahead.
Yes, good afternoon and thank you for an excellent and timely presentation. I've learned so much today.
You are most welcome.
A question, I filed a PO1 because I was getting 2 pensions from 2 different organizations and they were not applying any exemption at all. So now I file it with income tax. Do I need to come back to get the letter to take to them, or would income tax send it straight to them?
The letter is sent to the entities.
Okay, fine. Another question is, I filed my estimated return, because sometimes I do contract work, right? So I file estimated, but I noticed the NIS, for the amount that I put there, the NIS is exorbitant. So how do I get that corrected on the system? It is based on what you taught me today. That is what 6% of the income, and that would be
Right.
off the additional income, not the pension, right?
Not the pension income. So it would
Right.
be
So
6% of your self-employment income up to a maximum of $5 million.
right. So based on what the system is showing, it's not correct. Say, okay, for example, I have like $14,000 and the NIS is showing 11,000.
$14,000 gross?
Yeah, and the NIS is showing 11,000.
That is a case that would need to be looked at on the system. It does not sound like that should happen.
Uh-huh.
And so I would have to eyeball that one. We would have to look at that one.
All right. So what do I do in that case?
All right. What you could do is go into one of our tax offices and have a compliance officer look at it for you.
Okay.
Or one
All
of
right.
our officers in a tax office.
Okay.
Look at it for you.
Okay. All right. And I also need to amend the SO4A as well.
To utilize the additional threshold,
Right.
you may do that.
All right. Thank you so much.
You're most welcome. The last question now. Who is taking the last one? Grace Smart, go ahead. Grace, the last question is yours. All right. Since Grace didn't want to take it, Miss Bygrove, you are the last one then. Marjorie. Okay. Judith, go ahead. Judith? All right, so nobody wants the last question then. I now throw back to Mrs. Monica Walker. And I just want to say thank you for your participation. You have been a lively bunch. It has been our pleasure. I just want to say, you know, I've heard the call that we need to do more of these sessions, and you will be hearing from us. So keep your ears to the ground, and you will be called to other similar sessions or sessions on other topics. And so at this point, I now hand over to Mrs. Monica Walker for the closing word. Thank you. Have a good afternoon.
Thank you so much, Colleen. And thank you, team. Debbie, Courtney, Marie, Grace, thank you so much for the support you gave. Participants, we are grateful for your participation, your inputs, and Tax Administration Jamaica stands ready to answer your questions. So please feel free to let us know. The revenue measures are still out, and we are at this point preparing other technical advisories for your information. So please stay on the lookout. We're coming next with the reverse tax credits, and I'm sure it will be applicable to many. So thank you so much from Tax Administration Jamaica until we send another invite as we seek to share information with you. Thank you.